If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show. Good morning, everybody. Welcome back to another NFP report. I don't know how many I've done of these at this point. I guess I could go back and count them. But I've been doing them pretty much every single NFP since 2019, let's call it. And they just get better, man. They just get better with time. Got a banger question up for the day right off the rip. I was wondering why yields rise when the price of oil and labor costs also rise. Great question. So I want to talk about a couple things today. First of all, oil is flying. Am I feeling some annoyance by getting trailed out? Yes. It was a profit though, and honestly, I'm feeling pretty decent with how this year so far has gone. I've been pretty cautious on stocks, and it has felt like the right thing to do. I have been trading commodities a lot more, currencies a lot more. I've been selling some premium. In general, I think that the index, well, I know that the index level, equal weighted or market cap weighted index has been a loser for a couple months. Even though, it hasn't gone anywhere, there has been money to be made in many other areas during this same period of time. Energy stocks, oil, they've been ripping, right? There's been money to be made on that side of things. Gold earlier this year. So we have a good, a bit of macro to do here today. Of course, we have the non-farm payroll number coming out in just over 10 minutes. And I know a lot of people are going to, jump into the stream and they're going to say, Nick, is gold bullish, gold bearish? Is dollar bullish, dollar bearish? Is Nasdaq? Let me just say it now. I'm going to have to say it 4 more times. No one knows with certainty how the NFP report is going to drop. I cannot tell you if the dollar is going to go skyrocketing or if it's going to plummet or gold is going to go higher or lower. What I can tell you, however, is we can map out a game plan to trade the aftermath. We cannot know what the NFP report is going to do, but we can discuss what we are going to do in response. We are going to be responsive. We are not going to try to predict the NFP report on this stream. If you're looking for that, good luck finding it. And if you find it, please tell me, because man, that would make my life easier. Nobody knows what the day is going to be. You don't have to. You can trade the follow-through move if there is one. So no one knows if, you've got like US 30 sell NFP. On what basis, right? How do you know? You don't. That's gambling, right? If you're just snap calling with 10 minutes to go, short the Dow because it's going to work. Well, you have a 50-50 chance of working. You might be right? But it's not, there's no edge there, right? We have to actually build a logical trade plan around what the data is telling us about where trends may be going in the next few weeks. I'm not trying to be harsh. I'm just telling you the reality. You're going to see it in the chat. Please ignore it for your own good. You'll have people who say, oh, short gold or buy gold or sell the dollar. Look, they're going to 50% of the time be right, 50% of the time be wrong. I'm not going to do that here because I think that's not what trading is all about. Trading is about building a logical trade plan around what the data is telling you now. So we have a lot of stuff to go through. Stocks are lower. Oil is higher. Why is the dollar strong? Why is the dollar strong? Two parts. Number one, it's the global reserve currency. When there's fallout geopolitically, a lot of times people rush right on back into the US dollar. They say, okay, this is the safest. It offers yield higher than the rest. Why else? Look at yields. Boom. Yields are rising. Why? Because oil is rising. Let's walk through. Let's think about this logically. Oil prices skyrocketing. And by the way, NFP does certainly matter today, but is being sidestepped by the geopolitical stuff. Because the market cares so much about what is happening with oil right now. Let me explain why. If oil prices continue to move higher and stay higher, if that is your base case, which for now, that still is kind of mine as well. I'm not willing to chase it at these levels. I'd be looking at pullbacks. But what does that do to the rest of the story? High oil price equals elevated prices in everything else. When you go buy a box of cereal at the grocery store, how does it get to you? Does it just magically show up there? No, there's trucks that brought it there. There's manufacturing plants that, put all that sugar in your cereal, right? And then they ship it to your grocery store. There's movement of physical goods. That all has a cost to it. Transportation costs are directly affected by what is happening in the price of oil. Gasoline prices, it causes significant moves one way or the other. Oil's up 9% today. It is continuing to blow out here. We are seeing oil completely rip. And what that does is it says, uh-oh, inflation, inflation, inflation. That is the market's focus right now. So suddenly, if we're going to get more inflation, what does the bond market say to that? The bond market says, oh, the Fed's not going to cut rates. They can't cut rates. If inflation is rising, if oil prices, if this war in the Middle East goes on for a couple of months or longer, remember I said this yesterday, Ukraine and Russia, people were thinking it was going to last weeks. We're talking about years now, right? If this goes on, if this drags out, suddenly you have an elevated oil price for a while. And guess what that does to Fed rate cut probabilities? It hurts probabilities. So you have yields rising. That is why oil and yields are attached right now at the hip. And that is why stocks hate this. They hate this. Stocks had pumped up on the idea that trade was becoming more globally accessible and free than worst case scenario with the tariff stuff. And the market was really cheering the idea that, hey, we're going to get some rate cuts and we can sustain these expensive valuations on stocks because borrowing costs are going to come down in the US. I know we're going heavy on the macro side, but this all matters because today's NFP report, I'll tell you what, the stock market actually does not want to see, in my analysis here, the stock market does not want to see really strong jobs numbers. Why? Because if the stock market sees really strong jobs markets, that's going to be strong for the dollar, right? If you get a really strong jobs report, let's say you get 100K jobs added. If that happens, dollar's going to love it, but stocks are not going to like it. Why? Because stocks want rate cuts, and rate cut probabilities are already getting hammered here with the rise in the 10-year yield. But it's about to get a whole lot worse if the jobs market is truly stable enough that the Fed doesn't need to cut rates. We on the same page with this? In a very weird way, I think the stock market would like to see a soft jobs report today. I think that makes a lot of sense given the dwindling rate cut probabilities taking place due to this geopolitical conflict. The longer this oil price remains elevated, the longer the conflict in the Middle East seems to be spreading, the more likely it is that inflation will rise globally in consumer price indices around the world, because oil and gas prices are a direct input on prices of everything else. And this is another follow-up question. This is why we have been talking about it. This is not macro bullish for gold. Now, gold is holding up better than stocks, which everything makes sense here. Like macro, I know a lot of people have been really confused and frustrated. People have been thinking, how is gold not going up on a breakout of a war? Again, I am always learning something new. I always embrace when I make a mistake, or I try my best to embrace when I make a mistake in markets. I try to continuously acknowledge that I am a student of the markets, and there's so much to learn. It is so complex. There's so much that goes into financial markets. It is so much harder than it seems to the new retail trader who pulls up candlestick charts on TradingView and thinks it's going to be easy money. There's so much to this game. Gold going down macro-wise makes the most sense. It's weird. You're like, what? But notice, relative strength, gold is doing just fine. Compared to stocks, compared to the Nasdaq, right? Let's compare. Gold's holding up okay. But why isn't gold higher? Well, because the dollar is firm. The dollar is getting a really solid bid. Yields are moving higher on higher expectations for inflation. Higher expectations for inflation, is that good or bad for gold? The new trader, new to fundamentals, would say high inflation, gold goes up. Maybe over a very long stretch of time. If we have elevated inflation for 5 years, 10 years, that's good for gold. We've seen that in the last 5. But not so much in the short term, because the gold market likes when the Fed is cutting interest rates and pumping money into the system, right? If we're talking about here elevated inflation and yields rising, probabilities for rate cuts getting dashed, gold is only hearing, oh, wait a second, the dollar's going to catch a bid and it's going to be a safer spot to be in than it was the last few months. Uh-oh. And so gold isn't doing a whole lot of nothing. Now it's catching a bid. Now there is bullishness here from people who are saying, oh, wartime breakout, buy some gold. That is happening. That is 100% happening. But at the same time, the dollar is strengthening like a mother. And that is bearish gold, right? Because we're seeing probabilities for rate cuts get cut like crazy, or I should use a different word. Probabilities for rate cuts are massively getting slashed with all of this stuff happening. Gold hates that. Gold likes rate cuts. That's the biggest thing. If you want to know one thing about macro, if you want to isolate why gold is moving, gold likes rate cuts. Gold hates monetary policy tightening. And the Fed is looking like it's turning more hawkish and is almost going to be forced to be more hawkish when you have one of the biggest and most volatile inputs to inflation blowing out in the Middle East. Okay, guys, we've got NFP report coming out here in the next 1 minute. If you enjoy the macro, do me a quick favor, hit that thumbs up button, subscribe. We do this all the time. This is free value on the internet. I'm hoping it's helping you. I go through this every day for my own, analysis, and I share it with the class here. So if you enjoy this stuff, then make sure to hit that thumbs up button and subscribe. More macro is coming your way. Don't you even worry. I'm addicted to this stuff. It's not going anywhere. We'll see what NFP brings us here. Again, we don't know what's going to happen with the jobs report, but we can reflect on it once it comes out and decide if there's potentially some follow-through moves one way or the other. Let's see what jobs report brings us here in the next 10 seconds. We've got the NFP number dropping. I've got your all markets view on the screen so that we can keep an eye on what's happening. Stocks on the left, gold, silver top right, dollar middle, oil bottom right. Let's see what happens here. Again, remember, okay, we're seeing an initial push lower here for the U.S. indices. Gold is pushing higher, silver pushing higher, and dollar moving lower. Stocks are stabilizing. They're staying flat. That's sounding like it was a pretty weak number. Let's see. Oh, baby. Oh, baby. Minus 92,000 jobs. Uh-oh. Uh-oh, what happened? That's rough. Okay, so that brings us into a circumstance in which case, remember when I said the jobs market would want to see soft, or the stock market would want to see soft jobs. They wanted soft jobs. They don't want super negative jobs. That is recessionary worries. You also have inflation rising dramatically. Stock market's not going to like this. It's my pulse. My instantaneous response to that is stock market is not going to like that. That is very weak. Now it does probably boost probabilities for rate cuts, but is that enough, or is that too late, too much? We've heard Jerome Powell say from his own admission that revisions are likely to be coming. And so actually, did we get revisions on the previous? Revised down slightly. Okay, so not too much of a revision on that last number. So we did have a strong number last time around, but that minus 92,000 jobs, guys, that is rough. Unemployment rate did tick up as well to 4.4%, 4.3% expected. Guys, that's a weak jobs print. That is a weak jobs print. Retail sales number was slightly better than expected. Core retail sales slightly worse than expected. Average hourly earnings went up just a tad more than expected. And suddenly you have a circumstance in which you have rising inflation and a jobs market that just can't hold it together. Challenging stuff. If we take a look across some of the markets that are moving here, we have Bitcoin. I am watching this one for a possible buy today. Going to keep an eye on Bitcoin. We'll bring in, oh, there he is. Chris, how's it going, man?
Morning.
Chris, fair to say that made the case this morning that the market, the stock market, would have appreciated just a little bit in the jobs markets, maybe help boost those rate cut probabilities because they're getting slashed from the oil price. We got way more than I thought to the downside in terms of jobs. Paints kind of a bleak picture, right? You have inflation probabilities rising with the whole elevated oil prices. And meanwhile, at the same time, you have the jobs market and GDP numbers disappointing expectations to the downside.
Yeah, that's a terrible number today. I was thinking if it came in like 50,000, under forecast. I thought the revision was going to be much heavier to the downside versus this at a negative print. Again, it's a 1 day move. I mean, this is certainly bleed into the weekend as far as like futures pricing. VIX had a huge spike. I mean, you've got your dashboard up. I mean, 25 to 27. We're up 16% again today on the VIX. We'll see. I've got, we'll look at some zero DT flows to the downside. We're going to be opening up about almost 1% lower, 0.76. It actually was like 0.9 a second ago. So it's, I don't know. It could be a shockingly like, hey, the damage is done. Market gap's lower. Doesn't really go anywhere. But just keep in mind our recent lows on S&P are 67.11. So just keep an eye on this. But next week, I mean, certainly pressure to the downside. This just continues to just push and push and push where this market may want to just leak a little bit lower. So I said this earlier in the week, if we have a daily or a weekly close below this yellow box, it just kind of bleeds a little bit lower. But a print like that could, make this happen a little bit faster. We could have a pronounced breakout and there could be some follow through coming, next week. So it's seasonality too. I mean, just remember, it sucks to see the numbers like this. The Fed watch tool doesn't really show anything shocking. It's like, well, I guess they cut once, Nick, in September. I don't know if this changes by the end of the day. We'll see.
I was just going through that concept. I was doing a macro heavy breakdown this morning. Cut to the chase, keep it really short because I don't want to go through the whole thing again. This oil shock is directly impacting inflation expectations. Yields have been on the rise in response to this. And exactly what you just pointed out. Probabilities at one point were 3 cuts this year. We're now looking at like 1.
Right.
Things have really seriously pulled back in because that oil price is the wild card. You get a blowout in oil like this, and that throws just about everything out of the kitchen there where we were cooking up some rate cuts. We're looking at a much more challenging landscape to see that many cuts when you have, again, the most volatile aspect of inflation, energy, just completely ripping here to the upside. And Chris, at least from my vantage point, I don't have boots on the ground. I can't give you the minute-to-minute updates on what's happening in the Middle East, but from what it sounds like, from what everybody seems to be reporting on, it doesn't look like it's going to be sort of just a one and done, 1 week kind of thing. When it first popped open,
Right.
oil prices looked like, okay, maybe we were going to kind of chill out pretty quick. Maybe there was going to be some immediate bring back to the table. Maybe not so much. Oil prices look like they're wanting, and maybe that guy Don in your chat room, maybe he
I
knows something that
know.
we don't, man.
Don might have, he might have some sources that I need to tap into.
Don was calling for $100 oil, and I don't know, I don't even know who Don is, but Chris has it on his chart. He's got it plotted on there, or he at least did yesterday.
No, I got it. I'm keeping it, man.
Let's
I'm gonna
take a
give
look
Don
here.
all the credit in the world if he nails it. So, and that
There
was
it is.
literally, yeah, within 30 days. And you know, I talked about maybe taking a trade on futures, looking to get long on a pullback. I mean, we've seen a lot of this in the last probably 3 to 4 months. We've seen something break out and just not pull back at all, and this oil could just be on that march. I mean, this could be just, you know, the suppressed oil in the mid 50s. It just rips and has like nothing to stop it. So yeah, why not 95 to $100? Now, I guess I'll ask you this: would you be still long at $95 to $100 oil?
Well, so I'm out of my trade and honestly kicking my foot under the table because I'm annoyed that I got out of it.
You got wicked out. I mean,
I did get wicked out of the trade, and I mean, I made money on it. I did good, and not to mention, I missed that leg lower in the market recently. Like I'm feeling,
right.
I think year to date, Chris, I think I'm at. It depends what it's going to look like today, because of course I do have some risk on stuff. Around 12% year to date gains. I'm feeling really good with that, given that the stock market's not moved anywhere. I've caught a lot of the commodities upside in gold this year and in oil. And I've stayed kind of far away from tech, and I feel like that has been. I know you have too. That has been a really good play on our part. Now, where I messed this up is I could have just stayed long oil, but of course, you can always play that game in your head. I did get wicked out of the oil trade, make fun of me, throw tomatoes at me. Look, it's part of the game. It happens. Annoyed, but part of the process. So I'm looking at oil and I'm saying, okay, do I want to be long up here? No. If I was to get long oil, I've said it every time, I have to wait for that bear case to come back in. Like I need something of like, oh, you know, maybe we're gonna de-escalate a little bit, and then you get some like real hard quick selling, and then I actually like the idea of buying into that dip, rather than trying to chase a headline that has come out, because I know there's a good chance by the time I get that headline, that price has already factored it in. It's already moved well in advance of that. So to me, I prefer buying that dip on oil. Although I'm going to say, I think part of my original thesis, Chris, for why I was so bullish on oil was not because I was calling for a war in the Middle East. That actually was not at all. I liked the oil trade before all this quite a bit because I liked the jobs report, which we had before, which was strong. We had PMIs solid. We had GDP growth solid. We've lost a little bit of that story today with the jobs report coming in. So to answer your question, I actually think I'm probably going to stay on the sidelines for oil for now and probably trade something else.
I'm right there with you. I mean, if anything, if we get to 95 to 100, it's tempting to want to take something to fade it. But honestly, at this point, if the VIX, let's say we rip 30 plus VIX or maybe get into the 40s, I'm probably going to short the VIX.
Okay.
You know, like that might be my next, like, hey, this thing is ripping like crazy. Let's look at a fade move. It's like, I'll fade the VIX at, you know, maybe 40-ish and go out a week or two. I mean, 40 plus is pretty hard to sustain. 20s, we clearly have done a great job of sustaining 20 plus VIX the last month or so.
Yeah.
So anyway, I mean, there's plenty of premium to be looking for. Ivy rank's going to be high on a lot of things, but like I said, I'm just going to stay patient. Like, you know, today is the market going to take the entire move? I mean, 0.91 futures, we're going to open up way lower. Reasonably, I would think that 2 to 3% is a big nasty day in the markets. I mean, we've had a couple of distinct days here. The October 10th 3% swing, November 20th 3% swing. These single days were 2+% one way. One was down, one was up. You know, 2 to 3% is a big single day move. It does kind of knock around the market makers. So that would be a massive, like, inefficient day. So I'm, you know, again, today, my plan would be, let me see. if we're going to gap lower by about 0.9%, I mean, we're going to be all negative gamma today. So I'm probably going to look at selling bear call spreads, back into the gap fill, because I think that's going to be a challenging thing to fill. VIX will be high enough that maybe I can still get some decent premium staying above that. I'm not trying to call the bottom today as tempting as it is, because what I don't want to do is see the market have like a 2 to 3% day.
Sure.
And if you follow an option chain, that could literally mean like what looks like a 1 delta at the open could seriously be like at the money somewhere part of the day.
Yep.
So all that means is if we're going to see like a 2 to 3% total drop today, nothing's necessarily safe other than staying out of the way or just selling prices that are higher, like selling calls and having the market fall. That's an easy way to grab some profit today.
I've got a couple levels here for the class in regards to the U.S. indices.
Yep.
To your point, a nasty day today. I would say you've got a break on Nasdaq. We've been in this 1.5% up, 2% down, 1.75% up, 2% down, just chopping back and forth.
Mm-hmm.
I think if we're going to get a narrative shift, like truly taking this market from this, and you've heard it as well as I have, Chris, is like we've been in this resilient market, chopping back and forth. Let's cut to the chase. What actually gets this market to sell, like we lose that story, is if you actually start taking out these major levels of support. Like if we've been in this chop range and we've been able to hang our hat on that for a while and say like, hey, this market, every time it goes down, there's a buyer there. Well, if that buyer does not show up, if you see that, and again, that's a big move to try and call for the rest of the day. I'm thinking more that could be like a bleed into next week. If there's something that happens over the weekend, that's your level that at least I'm watching on the Nasdaq, is that 24,000 give or take level. S&P 500, we're getting pretty close to that staunch resistance. Support area that we have seen for multiple months hold very well. A couple days back, we had aggressive intraday buying come in this past Tuesday. I bring this up because if this level breaks, to me, this is like the levee breaks, right? You have a big fill to make your way through in terms of this straight move that we had back in November, December. So I think we are actually kind of at a decision point, Chris. You have jobs data now. Not only I was thinking that the market wanted to see a little bit of jobs weakness to boost rate cut probabilities, but I think we got more than we bargained for on that side of things. I think that jobs data print is actually alarming, and you couple that with all the other things that the market had already been worried about. I think you have the basis for a little bit more of a corrective pullback. Again, we talked about it a lot. I've been we chatted off the stream back and forth a little bit about what we're doing. I'm looking to sell premium on stock indices. Specifically, I sold the puts at 655 on the S&P 500. So I'm not outright bearish on this market. And I think the best way of putting it is that if we continue to see a sell-off, I am modestly bullish on it. I think.
What was that expiration, by the way, Nick?
Out to April 17th.
Okay.
So 45 days.
Monthly. Gotcha. Okay.
Yeah.
Good. I like the level. I think that's a strong level to see a decent bounce. I mean, there's a decent seasonality too. You can probably pull it up in the Edge Finder with middle of March has kind of marked some pretty significant lows. The pressure to the downside to breach, like you said, that like 67.70 zone, 67.50. We poked it to last week. I think Tuesday's buy was 67.11. So if we are closing red with a daily candle, weekly candle, it opens up this break from right around 67.75 down to about 65.50. That's where your put is at. I still think even if you were assigned the shares, would you take them and flip them?
Yes, for sure. I'd be happy. It's not, a short put on my entire portfolio. It's just a piece, and I would be happy to take assignment if I get it, and probably just look to try and catch that bounce if I could get it. So
I'm gonna look out 45 to 60 days and see what type of. I might do like a wide put spread. So what I've been doing on a lot of my margin accounts is tons of premium. I just added up yesterday, so I think I talked earlier like $8,000 in premium just on like managed accounts, like super conservative, just selling premium all the way down here below these April lows. I'm probably going to look more in like the 30 to 45 day range on S&P and maybe look at this area and maybe go 30 to 50 wide. That's a decent discount. If I could own shares, 6150 or 6,000, I kind of start there. So the one thing about this job number is, on top of the escalated conflict in the Middle East, is now, you know how that's kind of like misdirecting everything from this AI narrative, the AI disruption. Now I feel like the jobs number is front and center of like, oh crap, this is a no hire and yes fire type labor market.
Sure.
And it just renews all the fears of like, here we go again. Now our labor market sucks and nobody's gonna have jobs. And it's just a very emotional, emotional reaction. You can kind of tell that, okay, I mean, we have crappy data job wise in the US. I think we're suppressing inflation data for sure. So anyway, man,
and we've had 3 years, Chris, of just a rock star stock market where, you know, you're talking about AI and it's you know, been a major winning story for some time. But I think that the market has grown tired of that as an answer to why we should stay long stocks. And I think with this pile up of things all at once, I wouldn't be surprised if you get some kind of a flush to the downside. Now, I still am a you know, bull, as we've talked about, from a longer term perspective. But this consolidation is not something to me that I'm like, yeah, you just sit there and you keep buying that consolidation. For me, I'm like, well, it depends what the scenario is. And right now, this thing, at least for now, looks like it wants to resolve to the downside in the short term with all of this stuff piling up. Of course, we know the stock market can climb the wall of worry, but that doesn't mean it happens immediately. Like, you could have that wall of worry build a wall for us to climb. Like, we really don't have that much to climb right now in terms of price. We're looking at a Nasdaq, guys, that is from the highs still only down 6%. That is very modest. So, you know, you look at the S&P 500, you're down only 4%. I know this sounds like gaslighting if your portfolio is full of a bunch of growth stocks because you're down 40%. I understand that. I'm just saying, from an index level, we could still see some flush in some of the sectors that have held up better, right? You could get some of those come down to meet the Mag 7. And I also, you know, speaking of Mag 7 here today, getting hit hard on this as well. I just also see a lack of conviction for this market to the upside until you get the big boys at the top actually playing ball. Like, it's really hard to see the stock market ripping through highs without the tech story coming back to life.
I totally agree. Mag 7 has to have, I said the Mag 7 just has to be stable. Doesn't necessarily have to be bullish, but just has to be stable. So if there's pressure on Mag 7, that's that, you know, the market broadens. Everyone wants to see a broadening market. Everyone wants to see a healthy bull market. A broadening market is also typically going to be a pullback. Everything pulls back, and that kind of levels the playing field where the outperformers kind of pull back and the underperformers, you know, suck less. And that's a market broadening. So Mag 7, I don't know why I put XSP in here, but Mag 7 needs to be resilient. And so far it kind of is. I mean, I'm still looking at this giant swing from April lows to these recent highs. I think that's where my fib is at. Where the heck is it? Way up. Yeah, it's all the way up there. So we're at a 23% pullback on this massive swing. You know, it's, well, let's just say this. If we don't hold these lows, then we're probably talking 38, 50 to 61% pullbacks on mags. That's going to put a lot more pressure on the overall market. I think the rotation has already started away from it. The one thing that might be missing in 2026, which is not a bad thing, is, do you remember this rotation that kind of started in 2025, Nick?
I do.
Yeah. So we had that. Let's say we had that again in 2026, but we don't throw Liberation Day garbage on top of that. I mean, I know we're in the middle of a conflict right now, but it's like, is that Liberation Day? Is that systemic risk for the world? Not necessarily. That was kind of self-induced. So I feel like if we have, you know, rotation and it just kind of rolls over, I guess we'll find out the market's interested in buying it at a decent fib swing. Higher lows, it's like, well, there's a big level for it if we get it.
Chris, you know, something that is kind of interesting is when the market is ripping up every day, it feels like a no-brainer to want to be buying some of the further out on the risk curve stuff.
Yeah.
Right now, to me, that sounds, and again, maybe 3 weeks from now, someone will throw a tomato at me for this one, but I feel like that's just a really, really hard trade to place right now for me. Like, if I'm trying to make the bet that, you know, your core weaves and your C3 AIs and all of these, you know, kind of hype stories, like, when hypes, you can see how fast when the market actually catches a real risk off move, how quick those stories start to look silly.
They're
like
brutal.
NFT world, right? NFT or Am I thinking? No, NFT, right? I'm getting my
Oh
NF
yeah,
confused.
close.
Like the
I know what
NFT
you're saying.
world, right?
Yeah,
It's like you look at that and you're like, as soon as the market started selling off, it was like sobering as anything. You're like, that is the stupidest. I mean, I already thought it was kind of dumb, but it was like but you saw those things going up every day. And you're like, wow, but then it's like once you actually see the market saying, all right, cut the BS, like own good stuff only. It's
correct.
like,
Yeah.
boom, that stuff just gets waxed.
Yeah. And that, like, I mean, IGV caught a bid. I think somebody mentioned this, this week in the sessions. Like, I get it, and I wasn't surprised we caught a bid. But this to me is a short-term play. I mean, there's pretty solid divergence. If you saw that lower low in price, but momentum disagreed, it's like that's a low risk. Take a stab, very very disciplined stop loss, and from 79 to 87, it's like that's a nice little short-term run. I wouldn't be much more bullish than that outside of trailing stop losses. You look at a stock like Netflix that was beaten up, and Netflix has been ripping. It's up 30% off these lows. Again, divergence, trendline break, all these good things for like individual setups. I've got some long Netflix at 75 puts that are paying out really nicely now, and
Nice.
I'm probably just going to take the profit as opposed to. Yeah, I mean, I had a 75 put, I had a 78/70 ratio spread, and right now it seems like it's further out of the money, and I'm probably looking pretty good for profit. But does it roll back over? I don't know. But IGV, it's like I think IGV is a short-term bid. To me, if we're lucky on IGV, I could see this thing going back up into this area. So this would kind of be left structure, center. We head back up here for a bid. But to me, that's where this sets up. And again, if we're going to roll over into like a terrible bear market, which we don't know, but this continues to be more and more disrupted, which that's a forecast and prediction that I'm not making, because I don't think anybody knows, man. Nobody knows, how truly disruptive AI is going to be with software. I do know that, playing around with Claude and Chat GPT, it does about 80 to 85% of the stuff that I want. And then you have to kind of polish it yourself and make sure it's like, okay, this is something I could use. This is something I could publish. This is something I could share. Or when I've built indicators and things, it's like, I still want to send it off to a final developer to be like, hey man, just make sure this is all good for production. So, I mean, and I feel like more productive. I'm doing things I've never done before, which is, like I said, exciting. But I sent that video out yesterday. I mean, I'm doing stuff I haven't been able to do, which is kind of cool. Doesn't mean that I trust it 100%. And, you can also see plenty of examples of, have ChatGPT do a basic math problem and tell it something, it'll argue with you. It's like, so right. It's not there yet.
Well, and it's one of those things. I mean, I've been a huge fan of buying software stocks. However, the challenge that I have with it is the broader market to me still is pretty expensive. So I've been doing stuff like selling cash secured puts where I can we've talked about this over and over, but basically instead of buying stocks at current levels, other than Intuit, I did buy Intuit and I'm feeling really good about that buy. I was able to catch right near those lows here, $364, I think, per share, somewhere around that low. But anyways, most stuff I've just decided to just sell cash secured puts on, try and play the premium game on it. Because again, kind of the other side of that cash secured put is you have a max potential profit. So you're like, if it starts moving in your favor, there's only so much upside that you capitalize on. So, and I'm okay with that because I'm like, I kind of see this market in a sell rips kind of mode right now. So I'm perfectly fine with that. So I do think in terms of local business, I've talked about it a lot on the channel. I mean, A1 Trading, we have just seen so much productivity boosts from all the AI stuff. Our videos are better than ever. Our streams are better than ever. Our coordination is better than ever. Like software development is better than ever. But again, it doesn't mean those are incredible technologies. Nobody would dispute them. It doesn't mean that the market is not overpriced in the here and now, especially given the geopolitical shocks, which we have talked about numerous times over the years, Chris, as the two major things that can cause sudden or I should say gradual bear markets. The more painful ones are oil shocks and interest rate shocks. And usually they happen together.
Yeah. And what is happening on the yield is also an aggressive rate of change. And to your point on AI productivity too, it's like, I think that the disruption in AI is going to be from the big bloated software companies, like the big bloated ones that have lots of employees in it. The integration of AI in a, 1,000 to 10,000 plus employees, like that's going to be way more difficult than, having 10 employees, 20 employees, 50 employees, 100 employees. Like that's what's more scalable as far as like boosting productivity. And I think that's the real threat is like, okay, well, small caps, mid caps, could they see the big boost? Certain sectors, like everyone thought like tech is going to be the big boom in AI, but it's like, it could be banks, it could be healthcare, it could be, small startup companies that never want to go public because they could just have revenue that is like, yeah, we have 10 employees, we make $10 million. We're happy.
Yeah.
We don't need to go public and deal with, quarterly stockholders and have our feet held to the fire for every quarter trying to manipulate accounting to beat earnings. It's like that's such a microscope to live under. Well, I feel like there could be a whole world that exists without that.
Just think of the Mag 7 companies. Like in their mind, the stock market, Wall Street's like, how dare you be spending all this money on AI? And they're thinking not in the next quarter, but they're thinking the next decade. They're like, this is where the puck is going.
This is the future.
We have to position for it. We have to spend money now. And if you're owning your own business, like Chris, you and I, we own our own operations. Sometimes you can make a decision that's like not going to pay off in the next quarter or 2 quarters. Sometimes you can make a decision that's going to pay off 5 years from now or 3 years from now. But Wall Street hates that. Wall Street wants money. And someone also said Nick is continuing to kick his feet under the desk right now with oil. You are correct. Although I gotta say, more so, I'm feeling JOMO right now. The joy of missing out on this downside move in the stock market is very vindicating for me personally, because I've been cautious on the stock market for a couple months now. And then you get the market pulling back and you're like, okay, I can actually work with that. I feel, as opposed to if you're just a buy and hold person, the frustration of being stuck if the market were to go down for multiple years and not have any sort of recourse to position, to adjust, to manage, or in Chris's word, to repair trades, can be very frustrating. So I'm feeling a little bit of JOMO, Chris. I don't know about yourself. I imagine you are too, because you've got a lot of cash secured puts that are still well out of the money. But that is certainly, even if those are taking on a little bit of red today, it is a lot less red than perhaps what you would be if you were just in leverage stuff or high risk, high beta stocks.
Dude, for the fact that I'm still sitting on 50+% cash makes me smile. It's look, there's going to be, it's been a really interesting just mental battle this year, because it's like, should I be more aggressive? Should I be doing, it's like, you just kind of think maybe I can do something a little bit different. It's like,
well, cash never feels good, Chris, unless the market's tanking, right?
Right. And again, like the market's not tanking. And it's like, so there's, all I've been doing is like, I feel like I have to take little nibbles, because I don't know if this turns to a 5, 10, 15, 20% correction, or if we just kind of play around with this choppy, 5%. I mean, and Nasdaq's around 8%, but S&P is like 4 to 5%. Dow's around 4 to 5%. I mean, if we play around with that, like, okay, this is just a huge churn, huge rotation. But all it takes is one ugly break and that confirmation comes off, and all of a sudden that structured support is gone. That's when it's like, oh shit, this market just went down 10%, 15%. Like that's when I'm happy that I'm not taking these aggressive stabs and aggressive plays, when it's like, just let me take little bites. I've been doing it like every single week without fail, because the VIX has been up at 20 plus. And if we break 30, it's like 20 to 40. I want to remind everybody, 20 to 40 happened for 10 months in 2022. I'm not saying this is 2022, but like that's the VIX roller coaster ride, that it's like, if you were selling premium and having some cash, like the one thing that got me into trouble into 2022 was I had a great start to the year. Like January to April was all inflation, all energy, all value. And that basically boosted my year for profits. I was up almost 35% in like January to April. And I ended up finishing the year about 20% positive. But I battled the entire rest of the year as everything just kind of collapsed together for 9 or 10 months, because by October was our official bottom. And it's like, I fought. I just tried to hold. And it was really ugly. But anyway, point is, like, I don't think this is a 2022. I still think there's like the kitchen sink approach, and this will probably happen faster, man. I feel like, okay, if we get down enough, let's say S&P is at 6,500, we're probably going to hear from Trump. It'll be Besant, it'll be Trump. They'll go on their media rounds. It'll be something about, I don't know what it is, how it is, but it's like, I think that Trump has the much more aggressive backstop than the Fed. Sure. And then the market does. So, I mean, we're still talking about Cape-Shiller ratios at 40. We're still talking price to earnings at 24, 25 S&P. Like historically, that's still very expensive. And any type of earnings compression, brings the market back down. But it happens so much faster now. This is what I've been worried about, is like any real breakdown could be 10, 15, 20%. And it's still a bull structure. It's it's going to scare the crap out of everybody when it does happen. So I don't know if it does, but if it does, that's why I want cash in the sidelines that I can deploy. So literally right now, it's, we still have 30 minutes till the opening bell. I'm going to go out and sell some futures credit spreads because I can do it right now as the market is dumping. Now, does it dump further for the day? Maybe, probably. But I'm going to go out and sell futures spreads where it's like, I don't want to own futures. But I'm just going to take a stab and see if I can go out, I don't know, 60 days, 80 days, 90 days and see what 48.35 looks like on my trade. So take a look at this right now. Go ahead.
Yeah. While you do that, I'll just throw up some charts here that I've got. Okay. Couple things to think about here, and then we're going to throw over the show to Tiger Barry, our next host here. So stay tuned for that. VIX is back towards the upper limits here of where we've been in the last. Nothing saying we can't break into a 30 VIX. In fact, I would not be shocked if we did see that. S&P 500 here moving lower, but really the charts of the day, I think that are looking more like they're breaking down. Take a look at the Dow Jones. Dow Jones is actually breaking that 48,000. We were just cheering 50,000 on the Dow, and now suddenly we are actually seeing just as aggressive of a sell-off. Get this, just as, if not more of a retracement on the Dow Jones than the Nasdaq. This is showing that you have some real selling here. Of course, NVIDIA is now in the Nasdaq, so take that into consideration. The other one is the Russell. The Russell is losing some key levels of support that I've been watching myself. And looking like we may be, again, continuing to bleed lower. Some of the, of course, reasoning for this would be, these are your very interest rate sensitive components. I mean, so too is the NASDAQ. But when you're looking at the Russell, small cap stocks, they have been really excited about the idea of, hey, we're going to get some rate cuts this year. Same with Bitcoin, right? And I do want to just update before we end this session. I mentioned yesterday that I liked the technical setup on Bitcoin, and I have actually now I'm going to nullify that trade idea because of the jobs report looking the way it does. My thesis with this, when I talked about it yesterday, was we have a decent backdrop in jobs data. And I thought that was worth the risk reward. If we are, in my opinion, I think we have more potential room to continue moving lower in risk assets. I'm going to just pause on the Bitcoin idea. Edgefinder score is also losing bullishness on Bitcoin today for sure, with the NFP report coming in worse than expected. Before we show over, or actually we'll go ahead and let Chris, you head off. Thanks very much for coming on to the stream today, man. Action-packed week. And
for sure.
Hopefully you have a nice weekend, get away from the charts for a little bit.
Not until 4 o'clock.
That's right.
All right, see you guys.
Yeah, excellent session as always with Chris. And hey, if you guys are interested in trading with us, we are sharing all of our trade alerts inside of the VIP Discord. Today is the last day, by the way, for our VIP 40% off. And we're actually doing 45% off for stream viewers. You can currently get 45% off on the VIP group. If you want to come trade with us, you get notified every time we take a position. Let me show you what it looks like here. If I go into my Discord, by the way, check out this cool cartoon that our friend Tiger here, who's about to come on the stream, he made this. I thought it was awesome. But inside of the group, you get access to every trade being shared by our team here at A1. So you can see all the commodity trades that I'm taking, the oil position, the Forex trades that I'm taking. I've been trading pound dollar here. I bet that trade is actually ripping to the downside today. Yeah, we're looking pretty good on the dollar strength side of things. Index trades. Actually, I guess a little bit mixed because of the NFP report, but also risk off is kind of prevailing due to the oil stuff. Anyways, if you want access to the trade alerts, click the link being dropped in the live stream chat to speak directly to a member of our support team who can get you set up with that 45% off discount through the end of the day. Come trade with us. It's a great spot to be if you're wondering how to take on these crazy markets right now. Link is in the live stream chat as we speak. Up next, Tiger Barry. Stay tuned. This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like $5 all the way to $200. 100K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
Well, what's going on, everybody? Happy Friday. Good day by default, as always. I suspected we were going to get some fireworks this morning. I was on my stream this morning, and it started thundering and lightning outside. So I thought, was that a prelude to the NFP? Sure enough, it was. That's sick. That's what you call sick and disgusting, ladies and gents. That report coming out. You know, we had a, what was it, about a 60-something thousand number 2 periods ago. And then we had that big 126,000 number come out of nowhere. And of course, it was actually revised upwards. So it was all looking good. It was all looking good. I thought, well, I wonder if we're going to kind of revert to the mean a little bit, come back to the 50, 60,000 number. Oh, no, we went almost 100,000 in the hole. So sick and disgusting, not looking good out there, just as the dollar was starting to get a little bit of traction. And looking at the surprise index, it's yet to update. So this will definitely come down. I do believe this will come down into the 50s once it updates. I think it usually takes, half hour sometimes for some of these to update. So we'll see if it's updated yet. And it doesn't look like it has just yet. So there you go. But yeah, just looking at financial juice, guys, if you're looking for something like a Squawk or a News Squawk type box for instant news, this is one of my favorites. It just puts everything on here instantaneously. It kind of shows you a chart of those, the affected assets whenever certain reports are released. So it shows you a real-time, reaction to it, a big giant drop in this case for the non-farm, or spike if we get a good red folder release, something like that. But yeah, unemployment rate obviously in the hole as well by 0.1%. And I did refresh this just a little bit ago, and it looks like traders added to bets on at least one Fed rate cut in 2026. So it looks like they're changing their minds a little bit over there. And I do believe that was the updated look. So, dollar weakness. I mean, are we going to get dollar come back down to some major demand? I don't know. Let's go have a look at it. I mean, obviously we got that big spike down. Let me turn off my master pattern indicator over here real quick. Take a look here from a 4-hour chart for a quick second. Obviously we do have some more demand further down, but I don't know. I mean, it looks like we did kind of bounce a little bit into this demand right here. This had poked through this swing high up here. So is it possibly bouncing from that area? Well, I guess I would have probably revised it down further to around there, but yeah, we've yet to touch it. So it's just a wait and see approach. As far as the top setups, guys, let me look at my notes over here. So Aussie yen, just a quick recap of my trades. Yeah, the euro pound, needless to say, the long I was in, NFP helped put it out of its misery. Okay, so it put me out of my misery for a small loss on that. But I did get into a second trade yesterday on Aussie yen long, and that's because it was obviously the top setup, number one, but also just the strength of the currencies themselves. Aussie is at the top. Let me refresh this again. Sometimes it only loads half of them. But Aussie is at the very top still with an 83% score. Okay, so that means it's exceeded expectations on the bulk on 83% of its high impact events of late. And then the yen is right there at about 42%. So it's really I don't know how everybody else looks at this, but I kind of look at anything from the 40% range to the 60% range as kind of a neutral. Not really strong enough to buy, not really strong enough to sell. So it was right there on the edge, okay, but barely in the what I would consider a little bit on the neutral side. So yeah, Aussie strength, that's basically what I'm going for on that. And the pound still in the gutter, guys, still in the cellar. So, I had a good idea with the euro pound. I know a few of us on here on my live stream as well was talking about it, but the euro strength, at the time was up in the 80s or 80%, I do believe flat. It had declined a little bit, dropped 14%. And then the pound, of course, still staying in the gutter. So as far as today goes, looking at these top setups, again, I'm just going to watch my Aussie in, probably close it out at the end of the day. I don't want to be holding it over the weekend and getting a 50, 100 pip gap come Sunday in the opposite direction. You never know. You just never know. Okay, so going to stay out of that at the end of the day. But I'm just going to continue to look at this Aussie strength today. Be quite honest. I wrote some notes down over here. I just wanted to take a quick look. Euro CAD secret box. Yeah, let's take a look at that here in just a second. So the week NFP, unemployment rise, obviously US dollar negative, which supports Aussie strength versus the Japanese yen, risk on pairs. Jobs weakness could fuel risk appetite if it hits that Fed easy. And of course, boosting commodity currencies like the Aussie dollar. So yeah, I'm sticking with the edge finder on this as far as those, 3 bullish pairs and the 2 bearish pairs on there. Obviously the very bottom pair you see, the pound Aussie. Okay. That's again, the weakest currency for the pound. So definitely want to sell it. And if we're going to be getting some potential Aussie strength out of this, then I want to be looking at that one as my number 1 short. So it's Friday. I don't personally want to necessarily get into some longer term stuff like 4-hour trades. I'm kind of right there in that, I think, gray area to where it's not quite big enough to, put a big 100, 150 pip type of a stop loss on, but it's not small enough to, let it go through, let the trade stay open through some of these report releases. But yeah, when you factor in the geopolitics, the war and the bombings and the this and the that, I just don't like holding trades over the weekend. Again, I've gotten lucky on a couple occasions in the past where I did hold some trades open. There was the first bombing of the nuclear sites this past summer. I was actually in a long trade on something. I don't remember what it was, but came in and it gapped up like 50, 70 pips, something like that. In my direction, I made a nice profit, but then I felt uneasy because I'm like, was that skill or was that luck? Well, it definitely wasn't skill because that was just geopolitics, thankfully taking it in my favor. So I was happy I got the win, but then I was like, that could have very easily went the other way. So especially if you're newer, guys, and you're on smaller time frames, just be careful with holding trades open over the weekend. But yeah, pound CAD, euro CAD, let's go take a look at those. Euro CAD, pound CAD. So it looks like they're a little on the neutral side for the moment. We'll go take a look, and then I'll show you guys the Aussie yen setup that I'm in as well. So Euro CAD you're asking about. So let's go take a look here. Let me do this, guys. I want to just go put on my split view so I can see my daily on the right. So 8 is below the 21 EMA, more of a mechanical bearish look to it, downtrending, but looks like we've bounced into a higher time frame demand. We're chewing through it pretty nicely, though. I got to say, it seems like it's kind of acting like a hot knife through butter. I guess you could say that box looks like a stick of butter, huh? But yeah, just keep an eye on this demand over here. This is a daily demand. We got to be careful with these. Okay, just taking a look at the last candle before the strong move up. It leaves a gap in its wake, showing that demand heavily exceeded supply. So again, as always, if I'm a bank, if I'm an institution in this area and I start putting in a position and it flies away too quick, when price comes back around, I may consider finishing my position out, right? So that this is obviously a longer, this is from July. Okay. So it's a while. It's been a while on this. Perhaps that might be a little too far away, but I just want to be careful with that. So keeping an eye on that. If I'm wanting to short this, I just think we're in too much of a discount zone right now. I don't know if you were looking for long or short on that secret box, but for me, it's a no-go right now. I need to see if we can continue to chew through the rest of this demand zone and close below. If we can close down here, yeah, then I'll be looking for a simple retracement to a newly created supply zone. You know, in that case, we could be looking at something like this here. And you kind of have this one here, origin of a strong move down, right? I think it's premature to draw this box in, though, just because we're still in the demand zone, and it very easily could catch a bid to the upside. Okay, very easily could. So want to be careful with that for the time being, and just wait for more information, guys. You might get sick of me saying that. I say it a lot, but that's all trading is waiting for more information. Okay, not forcing the trade. So for that matter, I'm not even going to draw this box up because, again, to me, it's premature. Okay. If you're looking at some smaller time frames, yeah, it's just a little too sketchy, in my opinion, dropping down to some of these smaller time frames. You had some pretty good activity happening in the demand zone itself, the daily demand. You see all the VSA candles, a lot of yellow ones in there. You got a red one in there. So a lot of institutional type activity taking place, and rightly so, you know, because it's in a daily demand. So could they be slowly accumulating? Well, we don't know that until we either see, is it going to close below or is it going to pop to the upside? So just a little premature in my opinion on that. So that's Euro CAD. You said pound CAD as well, I believe. Pound CAD can make a beautiful 500 pip swing short from 183.4. Let's go look at that for you. Pound CAD. Okay, daily down. I like that. Same thing. We're in a demand on both of these. Let's go look over here, guys. Okay. History doesn't always repeat, but it rhymes. So whenever you have big spikes up, expect that you could get the same thing or a similar thing. Not a guarantee, but a high probability. All trading is probabilities. That's really all it is. Okay. Get as many odds enhancers in our favor for why we should or should not get into a trade or out of a trade. I don't really like the gap on this one as much. If I'm just isolating the higher time frame push away, that's my fair value gap right there. To me, it's small relative to the size of the candles. So I don't know how excited I am if I'm a buyer trying to buy there just yet. Mainly because of that reason right there. Not to mention we're in a downtrend. Okay, that obviously takes the main stage right there. But you said short, so yeah, just be careful about shorting in this area. You said your price though was, let me go check your price out one more time. 183.4. 1.834. Okay. So you're looking just below this former support line. So let's dig a little deeper on the 4 hour. 183.4. Yeah. Okay. I see where you're at. Let's drop to a 2. Nah, let's drop to a 1. Okay. If we look at a 1 hour chart, yeah, we could look at this as a potential supply. Get that colored in because that takes into account your, let's see, actually it's a little higher. So yeah, you're down a little lower, 183.4. So you're basically right here, looks like. So if you're looking at this area, refining it a little further, then yeah, your supply would be right here, but I will say it would be just a little on the narrow side for me. I like to look at the size of the candles when I'm drawing up my zones and make sure it's relatively about the same size as some of the expanded range candles, if you will, around it. And here's the other thing to think about. If we're looking at swing lows, swing highs, if we're looking at curve analysis on this thing, just keep this in mind too, okay? Swing high to swing low, and we break it up into thirds. We are in the top third, which is good, but there's also a zone closer. Okay, that's the initial one I drew up. So just be careful down here because if I'm a bank, I want to sell it. Obviously for as expensive of a price as I can, right? So if you get price coming back up in this area, I would expect a bounce, no doubt. But I would also see as a bank, as a hedge fund, hey, there's a more expensive price up here before this big drop, which is what kind of price movement is this? Hey, that's an impulse leg, right? When you're looking at swing low to swing high or swing high to swing low, okay, that's an impulse leg. So I want to sell it for as expensive as possible. And I see a final supply zone there for me as a spot to where I'd personally want to be buying. So I would do it personally like that. Obviously, not financial advice. I'm just telling you, if I put my money on this thing, I would be looking at something a little more like that. Or do like what Nick said yesterday on the stream. Maybe take a small feeler position where right there where you're looking, small feeler position with the expectation to add on to it up here. Okay. And then obviously put your line in the sand ahead of this swing high is probably what I would do. So yeah, that would be all right. I mean, if you typically take a 0.5% on a risk, just throwing a number out there, maybe you put in a 0.2% down here. If it goes higher, maybe you put the rest of your 0.3% up here or something like that. So, there's no wrong way to eat a Reese's, so to speak. But when all else fails, just be careful. I don't personally do a whole lot of break-up trades. I personally just kind of look for my line in the sand and just put in my full position, typically in this case up here. But I could see an argument for your case as well. What is your view on euro yen? Where is euro yen? Let's take a quick look. It's a neutral score at the moment. I do believe let's see here. Euro CAD, euro. I'm looking at my neutral lines only. Yeah, neutral. Too neutral. So you're getting no help at all on the technicals, no help at all on the smart money versus dumb money relationship. And you're just getting 1 point of strength for the euro over the yen. So that's just too neutral for me from a fundamental and sentiment point of view. But on a technical point of view, let's take a look. Yeah, it's quite choppy as well. If we kind of magnify in, you can see our 8 is below our 200 as far as our EMA. I'm sorry, our 8 is below our 21. Dark red line is the 8. That's the faster moving average. The slower one is the 21. So we are pretty well looking at a downtrend. I mean, even if you scroll all the way out, lower lows, lower highs, it looks to me like a continuation down. It looks like we've also bounced into a recent zone. So let's go back to a 4 hour, and you guys can see we hit this 4 hour area here. We whipped through it quite hard. It ended up pushing price up quite hard as well. That's not anything I was looking to trade. I just like to draw out my zones, even if they're neutral, just to see what they're going to see, how they react whenever they get there. And not only that, maybe it's neutral today, but maybe 3 days from now when the alert hits, maybe it's went bearish or bullish on the edge finder, right? So yeah, as of the time I drew that up, price would have been up in this area somewhere looking for a retracement. And as you can see, it wicked through. So a wider stop loss would have definitely worked if this were something somebody were trying to buy. Because if I look at this, if you just say you're buying up in this area, okay, take it to the top, that's 188 pips, or call it 200. So it's 200 divided by 2. Okay, 100 pips, that might be a huge range, but maybe you turn that into a 4-to-1, 50 pips. Okay, something like that. You'd be looking at, basically right about where it came. So it's too choppy. Just to finish my thought on that, this is just one big sideways ugly chop fest, in my opinion. But yeah, slowly, I mean, you do have a subtle downtrend. You do have on a 4 hour chart, you've got a 50 below the 200. So that's showing bearish strength on there as well. On a 1 hour chart, you've got a 50 below 200. So if you held a gun to my head, I'd be shorting this thing, but it would just be solely a technical setup and probably not in this range just because it's a little choppy. So maybe give me a push of price back up to this area, see if I can't find a decent supply. So. Why are gold and silver so weak? Let's go take a look at gold and silver for you. Gold, silver. Here's gold over here. So I do believe gold is a -4 as we speak, and I think silver is right up there or somewhere around there with it, or it was anyway. Let's go look. Or did it go back on? Okay, gold -1 actually, so it flipped. And then silver is a 0. So negative NFP, look, typically gold, silver like to take the opposite side. Remember, gold and silver thrive on chaos. You would think they'd be going up. Flipping over here to an hourly chart. Yeah, it's just going down. I mean, I think Nick called it the other day. Probably a lot of people taking profits up in this area. You did have a big giant push up. You had a gap up showing that it was thriving on chaos temporarily, but there were probably a lot of buyers in this area. Think about it. You got a lot of buyers in this immediate area right here. If I can get my thing up. Okay. You got a lot of buyers here, a lot of buyers, and then price pushed up. Well, they put their stop loss down below. So, at the end of the day, you might have had a little bit of a squeeze downwards. Okay. Profit taking, squeezing of stop losses all the way down. And then what happened? We bounced into a zone of demand. Okay. Kind of had a little bit of a demand. Now, I was looking at this zone the other day for possible buy, but to me, this thing was just coming in way too hot and heavy. Way too hot and heavy. Okay. That's a strong downwards momentum. I didn't feel like catching a falling knife. I like my hands. I didn't want to get one cut off. So I personally avoided buying into here, but depending on how big a set of balls one has, you could have taken a small trade up, maybe a 1-1, 1-to-1, 2-to-1. But it's just, again, just kind of choppy, slightly down. But today's activity should possibly push price up. I mean, bad NFP, but we also have to keep in mind we did have a decent retail sales number come in. Okay, we also had a decent average hourly earnings. So this is mixed data, but obviously, in my opinion, heavily skewed to bearish the U.S. dollar. So yeah, it should by default, by proxy, be pushing gold up. But the markets don't always act and react the way we think they should. They do have a mind of their own, and I just kind of see chop. I really do. I see a big spike up. I see a big drop down, and all these traders are just trying to catch their breath here. And not to mention, we've pretty much got a straight up neutral score right now when we're looking at the fundamentals, the sentiment, and the technicals. So that's kind of my look on that. Silver is probably going to be looking about the same. Yeah, same sideways chop action, and a same demand zone area where we got to drop in. So it's just trying to catch its breath. Okay, we get good news every day. This person or that person's eliminated, but then we get bad news. Oh, a school got hit, school children, right? U.S. assets, bases getting bombs thrown their way. So there's just a lot of hot and cold in the market right now, as far as I'm concerned. And then not to mention, you got oil just going crazy. I think we got up to $90 on Brent. Did I see that right just a little bit ago? Yeah, look at this. Look at this crap. 91 and a quarter almost. Okay. 91 and a quarter on Brent. Then over here on U.S. oil, 88. So these are stupid high price score, high prices, guys. Very stupid. These are going so crazy parabolic that my moving averages can't even catch up. If I go all the way down to a 15-minute time frame looking at my same 50 and 200, I mean, I'm at this point almost $10 away per barrel on oil just to catch up with my 200. Okay. So you see, I've got an alert here. And see, I've got an alert set right here, but I wouldn't even, with my rules, the way I look at it, I wouldn't even be interested in taking it because the 200 is way down here. Remember, for me personally, I want to see a pierce of the 200 EMA when I hop in a trade. I like it ideally if that EMA is at or, just ahead of a demand zone, vice versa. Japan and their intervention. You know what? I'm glad you brought that up, and I've got 2 minutes left. I want to show you guys something that's really cool. I did, and I'll end it on this because I'm already almost out of time. Let me see here. I'm looking for Fred. Where's Fred at? There's a Federal Reserve of St. Louis site. Where are you at, Fred? Come on, where are you at? I was just looking at it last night. But it shows you kind of the history, if you will, of interventions. There it is right there. Check this out, guys. If you go to this Fred website and you go, starting at the home categories, money, finance, watch this. Home, down here, you go to, so this is the main one, fred.stlouisfed.org. Homepage, click category, click money, banking, and finance. And this will give you guys something to look at here later on. Foreign exchange interventions. Watch this, guys. The very top one, Japan intervention. Okay, this is showing how Japan has intervened with its money. I'm just going to go all the way max up here. This shows you every time the Japan banks have bought dollars, if it's on the plus side, or if they've bought their yen, if it's on the downside underneath. So what's a really cool thing for you to check out, and you can kind of zoom in like this. Go play around with this, and this will be your homework for the weekend. Go look at all these dates where, in this case, where they loaded up on yen, because it's underneath, it's in the negatives. Go take a look at a daily chart for all these time frames on dollar yen. Okay, this will show you the exact reactions from the dollar yen whenever the central bank of Japan, okay, whenever they go and manipulate their currency or intervene in their currency. Okay, so I don't know. I don't know if they're going to intervene or not. Just to finish it out here, dollar yen. I mean, look, I actually marked this area as a possible short up here. It's kind of hard to go against the edge finder because I know that we are still getting a +8. But had I never met Nick and the edge finder, I'd probably be shorting up here because I'm looking at this daily supply. Got a couple 4-hour zone confluences in here. 158, 159, 160. I think as high as 162 is where they've intervened in the past for dollar yen. So it's awful tempting, guys. It's very tempting to possibly short this market up here just to take a stab at it. And maybe the NFP could be the linchpin. Who knows? Who knows? Okay, who knows? So anyway, on that note, guys, it's already 8:30. I do believe James is coming up right after me. So with that, stay safe out there, guys, by all means, and have a good one. Talk to you later.
Hey, stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the Edge Finder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the Edge Finder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edge Finder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream.
Hello. Happy Friday, ladies and gentlemen. How's everyone doing? Hope you're all well, and I hope you've all had a successful week. So I saw the question earlier about why is gold dropping, and there's a couple of different reasons for gold dropping. First of all, obviously got the dollar that is doing very, very well this week. Second of all, we've got yields that are doing quite well. So let me pull up the yields over here. So gold isn't, obviously, it's not a currency. So we've got to look at it slightly differently. Gold is used as, yes, risk aversion. We use it in terms of whether, obviously, the dollar goes up. We can generally expect gold to go down. It's not always one-to-one, but we've got the dollar up, bullish fundamentals on the dollar, and we've got yields coming up. So we've got the 2-year, 5-year, and 10-year yields all spiking to the upside, which is obviously a negative for gold. So we've got a few different reasons for gold to be down. At the moment, I'm not really seeing a bullish case. Gold was reading bearish on the Edge Finder. However, after we have, after we've had the data today on the US with NFP, unemployment and average hourly earnings, we've seen gold has actually ticked back towards neutral. So as far as I'm concerned, there is no buying situation for gold just yet anyway. Possibly if we get the dollar starting to weaken, that could be a catalyst for us to start buying gold again. Or if we see gold just flip outright back to being bullish on the Edge Finder, that could also be another little signal to start buying. But at the moment, it's just seeming quite bearish. So we've got the 30 minutes or the lower time frames here are obviously in bearish trends. We've got the H4 that's just sat sideways. And we've got the daily that's really not doing much either. So as far as I'm concerned, yeah, there really isn't that much of interest here. Check BTC, we might bottom in. Yeah, I did look at Bitcoin the other day. I'm not convinced that we are bottoming just yet. I think there's a couple of different things that we could pay attention to. So on the weekly time frame, Something that I do find could be a bottoming signal is this. So we've got our weekly previous resistance, we've got weekly 200 moving average, and we are seeing a little bit of a bid here. But then we ignore the weekly, we go to the daily, bearish, DH4, bearish, the lower time frames, bearish. I just don't see it. And then, as we've spoken about previously, if we look at previous sort of crashes in Bitcoin, they all are very large. Now, I think, again, mainly on a historical perspective, Bitcoin does have lower down to go. So previously we've seen sort of 75%, give or take, 85%. This has been 45%. We could have possibly double. We could be going to 40, 30, maybe even 20. I'm not saying it's guaranteed, but I'm saying that's like worst case situation if history does repeat itself and we see a larger crash towards 75, 80. 20,000, 30, 40,000 in Bitcoin are definitely in play. So to be honest with you, I wouldn't mind selling Bitcoin at some point. I think maybe the opportunities disappeared in the short term. But yeah, I'm going to keep an eye on Bitcoin, but I wouldn't be comfortable buying just yet. I think we're in a situation at the moment where obviously we could bounce. We could definitely start heading higher. But I'm seeing all of that sort of sentiment on social media at the minute. It's like everyone is looking at this weekly 200 moving average. Everyone's looking at its previous weekly high as well, which is starting to make me feel like we are actually ready to come lower. That's more of a contrarian idea, though, of course. Life, hello. AUD is more than weak the king on the edge finder, but yeah, so the Australian dollar's got a couple of different things going on at the moment. So we've obviously got the situation in the US and Iran, which, to be honest with you, is old news now. It's not really a factor. I think the main thing that is reacting to that situation at the moment is oil. And the reason I say that, if we look at risk assets like gold's not rallying off the back of this war. The stock markets aren't reacting, as far as I'm concerned, off the back of this war. It's more that the stocks are reacting off higher yields and the idea that rate cuts being priced out and rate holds are getting more and more likely, maybe even rate hikes. So not really interested in that side of things at the moment, but we do still have sort of a risk on tone in the markets, which the Australian dollar is obviously a risk on asset. So we've got that. But what we've also got is the Aussie pairs have had a crazy rally recently. I mean, this is the H4. Just look at it. Same with Pound Aussie, Euro Aussie, Australian, New Zealand. They're all very extended. So then if we go and look at the daily timeframes and all of these pairs, they're technically oversold. I mean, this is a 200 Bollinger Band. So we're way outside of our Bollinger Zone. On Euro Aussie, Pound Aussie, exactly the same thing, way out of the zone. The Aussie New Zealand continuously pushing above. So what I'm trying to say by this is I think a reversion, correction, whatever you want to call it, is more than due. And again, the fundamentals have been bullish for the Australian dollar basically all year. So how long do you expect the markets to keep pricing in the same data and the markets to continue to trend on the same data before we do have a larger correction? I think that larger correction might be now. Again, as always, could be completely wrong. But that's just from what I'm seeing at the moment. I'd expect a bigger bounce of 69K if this was bottoming, or at least for today. I think you might go lower. Yes, I agree. Thoughts on Nasdaq? Yeah, I don't really have anything just yet because we've spoken about this multiple times. The Nasdaq, the S&P, the Dow, Russell, they've done nothing all year. So we're still stuck in this sideways range. So what I'd really need to see is some sort of move outside of the range. With the idea that we've got an increasingly hawkish Fed. Yes, we had some cooler data today. I don't think that's going to warrant the Fed to cut rates at all. I mean, obviously, look at oil. So the Fed, I don't think is going to cut rates. So that leads me to think we could see some sort of move lower on the US indices markets. Now, where to? I really would like to say around 20K-ish, maybe slightly higher, maybe 20 to 22K-ish on the Nasdaq would make sense. 6K on the S&P. Is it 6 or 5K? Hold on, let me just double check. Yeah, around 6. excuse me, around 6K on the S&P as well. So that's kind of what I'd expect, but I've got no money on the line for that idea just yet. I'd need to see a bit more of a confirmation, as I said, breakout of the range and data that continues to support that idea first. Just opened my oil short. High risk, but I think it's time to correct. Contrarian vibes. Yeah, I mean, oil's got the same behavior. I mean, it's very, very extended. I mean, look at this daily time frame. So we've broken out of the Bollinger. I don't really use Bollingers very much. I'll only ever really pull out a Bollinger if the markets are very extended, like we're seeing with the Aussie dollar, like we're seeing with oil as well. So very extended out of the Bollinger. The RSI is overbought. So technically, yes, we're very extended, but the fundamentals warrant this type of move. I mean, there's a lot of fear around oil, the supply chain. Obviously, things with Iran don't seem to be, cooling down anytime soon. So yeah, I'd be very, very careful shorting oil. James, your take on GU shorts after today's miss? I'm still in favor. I would still be happy to short pound dollar, euro dollar, happy to long US dollar. I've got no change in bias. Today's data was just a little chink in the armor as far as I'm concerned. It's not enough to sway monetary policy. So yeah, it is what it is. Micro lot, no SL. Okay, have fun with that unfazed. It could work out fantastically well, but as you said, very high risk. What's your view on pound yen? I have no idea. Let's see. I'm not even sure pound yen's bullish or there's no reading on the edge finder. So just 1 second. I'm just going to take a drink. Okay, there we go. So pound yen. I would continue to lean bullish long term. So we spoke about this, I think it was Wednesday, that the yen is going to remain the funding currency. Yes, the Bank of Japan might hike rates. Yes, we may have an intervention at some point when dollar yen gets closer to 160, 165. It's not going to change the dynamic. Is the Bank of Japan rates are still very low. So overall, I wouldn't surprise, it wouldn't be a shock to me if we just continue to drift higher. In the short term, though, we are seeing obviously this sort of chop. There's no real direction here at the moment. So I would need to wait and see a real trend to start. I've just realized that was 30 minutes. Hold on, let me go to the H4. Oh, this is a weekly. What's going on with my time frames? Hold on. So weekly, daily. This needs to be an H4. I'm not sure why it's on the weekly 30 minutes. There we go. Okay. So yes, H4, not doing anything. There is no direction here just yet. So I would need to see some sort of, maybe even the low here get tapped into again. That would provide a nice long opportunity, or a breakout of this range. So whether it would be a break, retest of these highs, and then a continuation is also a different idea. But yeah, to be honest, there's really not much there for me. I'm finding the markets at the moment are very boring. So a lot of the moves have already happened. So for example, if you were bullish on oil, then you've kind of missed the move. So I was in oil. I think I entered down here. I took profits up here. I entered again here. I took profits here. So I've missed all of this. So there isn't anything for me to do. So oil, I can't do anything there. Gold, I think I would still want to be a buyer of gold, but I can't justify being a buyer just yet. US markets, I would like to sell, but again, I can't justify being a seller just yet. So at the moment, it's more a case of just waiting to see what happens, rather than really having anything to do. Dollar yen will rip past 160. Yeah, it wouldn't be a shock to me at all. The way the market dynamics are right now, I think the dollar is a very clear bid. I've just seen the momentum model guide has been dropped in the chat. So if you would like access to a completely free course with a video and a PDF, it goes through trade discovery with the Edge Finder. It goes through my technical strategy, and it basically gives you a framework from, again, trade discovery all the way to risk management and portfolio management a little bit. Nothing overly complicated. It's more tailored to newer traders or people that are looking to basically have a strategy given to them. So if you would like that, again, it's completely free. Fill out the form and it will be emailed to you, I think within a minute or so. Pretty quick. think pound CAD shorts are better than pound dollar to take advantage of the oil spike. I think you've kind of missed it. I think the oil, if that was the idea, you would have had to be in a bit earlier. So right now we're extended. Oil's extended as well. So if we see a retracement on oil and we see a retracement on pound CAD back to this level here, I quite like this idea. Something like this, I think, would warrant a short, and I might attempt it if we do get that. So that would be a really nice break of structure here. So break of these previous lows, then we could come and retest and then continue lower. I think that's kind of the idea. But right now, again, oil's extended, pound CAD's extended. Can't justify being a seller right here. We have the same play on oil. Yeah, I'm just a bit salty. I cannot believe it. I was in oil. I had 2 chances on oil, 2 opportunities. I had great entries on both of them, really, really strong positions. And I just missed like 90% of the move. It's just so unfortunate. But it is what it is. But yeah, to be honest, I think with oil, one of the things you could do, and this isn't advice, this isn't something I'm doing, is just looking for lower time frame pullbacks just to enter long. I mean, look at the momentum that oil's got right now. H4, daily, weekly. So maybe if you drop down to like the 30-minute, 15-minute, maybe even a 5-minute time frame and just wait for pullbacks, look to buy in, it could be quite smooth. But again, as I've said, it's very extended. The likelihood is, if you're not already in, the best idea is just to stay away. Oh, pound CAD. Yeah. Last thing, I was short pound CAD as well. I missed, well, I don't want to say I missed the move on pound CAD because I was stopped out on it actually. So it was my own fault. I can't remember where it was. It wasn't too long ago. It's 15-minute chart. It was over here on the H4. So I think it was somewhere in this area. I shorted here. I think it was around here. Then this moved into profit. I scaled in on this pullback, expecting a continuation lower. This move stopped me out on both positions. So I took a loss and then it just rallied down. Really unfortunate. Definitely not played this situation as well as possible. So yeah, I ended up giving a lot of potential profits back. But, you know, as part of trading, can't look back and say, oh, I should have done that, could have done this. Salty, I missed the gold drop. I had a sell limit at 53.89.9. Then price went to 53.89.2 and dropped. It's very unfortunate. Sad to see. If you were still in oil, would you sell now? So, okay, that's an interesting question. I've not really considered what I would do now because I don't like to put that frame of mind out there. However, I suppose we could do it for a little bit of fun. So let's have a look exactly where my positions were. I'm fairly sure I was in roughly around here. It might have been around here. I can't remember exactly where it was right now, but it was something like this. Something like that. So I had that one. Then I also had another one here. So after I closed this one, so it was, yeah, maybe along these lines here. So if I was still in these positions, what I would do, hypothetically, if both were still active, I would either fully close this one, or I would take 50% of the total profit off the table. So I would be taking 50% of this one and 50% of this one off. And that way I could book profits. I would also be like really aggressively trailing stops. So my stops would very likely be somewhere like this at this point. And the reason is, as I've already said, the markets are very extended. I don't know how much longer this has got. Some people say oil's going to 100. It very well could. But in a parabolic move like this, eventually we're going to get the complete correction back to the pre-move price. So yeah, very likely I would have either taken partials or at least taken one of the full positions off and, again, aggressively trailing stop loss. What was the $500 challenge you were talking about? I'm considering doing a little YouTube series because one of the things you see all the time in retail trading is people with low capital trying to learn to trade. So my idea is giving myself $500 and seeing what I can do with it. So not a case of having $500 in 1 to 500 leverage and gambling. It'd be like, allocate a portion of it to futures props, a portion to maybe a small 10K account I can copy trade from my live account or my personal account, something like that, and basically just show the process of taking $500 and seeing what I can really do with it. But the problem with doing that is it's very time consuming. And to be honest, I really can't be bothered doing that. But I think it could be fun. And to be honest with you, I think you could get views. So I don't know. I need to weigh up what my priorities are right now. Check Schwab stock. Good swing long. I can't trade stocks here. In fact, I don't trade stocks. I don't even know what the ticker is. So you're going to have to tell me if you want me to look at that. Well, historical data from Russia-Ukraine war show the move hasn't happened yet. The last time we had a spike because of war, pound CAD fell by 1,000 pips after the war and oil did not retrace. Interesting. Okay. Was not aware of that. Am I bullish on gold? No, I'm neutral on gold at the moment. I kept going till 120. Yeah, well, that's the thing. So oil, like I said, it could go to, I mean, forecasts I've heard do go up to 100 plus. But the issue is, again, after we've had this move on the daily time frame, do you really want to, if you're not already in it, what you need to consider is, would you buy here with a stop? I mean, where would your stop go? It would need to really go somewhere here within this range just to allow these lows, maybe allow some pullbacks here. I just don't see there's not an asymmetric risk here, is what the smart money would say. So you take profit, let's say 120, let's say that was your target, or even 100, somewhere in this range here. Okay, actually, I don't know why I'm drawing it. Let me just do a long position here. So let's call it in the middle and say around 115. Is this worth taking? I mean, it's pretty much a one-to-one. I don't think so for me. I just do not feel like this is a worthwhile trade to take. I think the best idea for me personally is just to sit out, find other opportunities. If there is a pullback, fine, maybe we could enter on that. But at the moment, it just seems like a chasing trade rather than a well thought out trade. That's exactly what you did with oil. Closed 50% on today on oil tops. Fantastic, Sluggy. It sounds like you've really banked on that. Well done. Just wait for retracement in short with a generous SL. Also a potential idea. So I've just realized because I searched with IC markets. So, okay, so this is the ticker. Yeah, no. No, yeah, this doesn't look like a good swing trade to me. Technically, I don't know anything about the fundamentals. I don't trade stocks. What I'm seeing, though, we've just broken below the 200 on the daily time frame. Weekly looks fine. Actually, the weekly looks healthy. The H4 is in a bearish trend, and the 15 minutes is gapped here. Looks like we've got a lot of selling pressure. So, yeah, to me, if you want to be a buyer, fine. But, yeah, I'd maybe just be waiting for one of these weekly EMAs to see a bit of a rejection. So whether it is here and we actually see a bounce, fine. We could maybe come lower back into these previous highs around this 100 moving average. Maybe if we could see a bounce there, again, fine. But right now, again, as price stands, doesn't seem great. Long Schwab on the 200 EMA. So I'm guessing you're long around this point here then. Do you trade an NFP? No, I don't trade. I don't actively trade news. Could you look at the Nikkei? Yes, I'm actually in the Nikkei. I forgot to go over my positions. So none of them are actually looking great right now. I'm in a bit of a red period, but that's all right. So yeah, I'm long on the Nikkei, mainly taken on the dailies. Let me get rid of these Bollingers. So here. So this was a case of we are still, as I've already said, I don't think the Bank of Japan's in a position to be hiking rates. Or again, even if they do hike to 1%, I don't think it's really enough. So I'm just looking for this trend to basically just continue. I'm happy to, obviously, it's a daily time frame, really wide SL, so just letting this market run, do whatever it needs to do. It's not on the edge finder as a bullish reading, though, which is a little bit of a downside. And the H4 is looking a little bit bearish. So it's not a super high probability, hence taking it on the daily with a wide stop and just letting it have some room to play around, do what it needs to do. So 130 is the number for oil. Interesting. James, with this jobs report, I don't see a buy on gold. No, the dollar is just too bullish right now. I mean, this weekly time frame to me, I wouldn't really want to go short. I wouldn't really want to go long gold. I'm not seeing the fundamentals to back a long gold at the moment either. So if you are wanting to be a buyer of gold, I think it's more just a case of waiting for the market to really give you a signal. So whether it be the Fed turns dovish again, whether it be we see a continuation. So right now, gold is pretty much sideways. Yes, we've got, slight upside, but this was, this was corrected very quickly. So if we could start seeing new highs form, then yes, maybe then we could start playing more of just the momentum and the trend, fine. But right now, technicals are flat. The dollar is doing quite well. The fundamentals of the dollar are pretty decent. We've got hawkish Fed. We've got rising yields. There is just nothing really there to say gold is a buy. I'm really behind in this chat, guys. I do apologize. I opened a long on oil straight after last Friday, Monday. After last Friday's on Monday. Very nice, Agent Dark. Really nice. You know what is really cool about being on these streams is I'm not sat here trying to over explain everything and it's a case of, sir, do I buy gold? Sir, do I sell gold? Some of you guys have really good ideas and you'll come in here and you'll say, oh, I bought oil at this time, or I've just taken 50% off oil today. It's like, wow, you really caught the move, So it's really nice to see you guys having success in the markets. That's why I really like this community. GU going long to break structure valid? No. Again, the dollar's doing well. I think the UK economy is still in a very difficult spot. The trend is bearish. I just don't see it again. There is no reason to be long on pound dollar right now. We've also got a bearish reading on the edge finder for pound dollar. So take that as you will. Yeah, to be honest, actually, I've just realized, Sluggy, you just made me think we are on Friday today. We may see a repeat of Trump's historical love for escalating on weekends. So maybe if you are long oil, I'm not saying buy oil now, by the way, I'm saying if you're already long oil, trail stops, maybe we get some sort of escalation over the weekend, and Monday oil gaps even further open. Not saying, again, that's complete guess, no idea, but it is possible, I think. Can you check the DAX? Yeah, I'm quite fortunate, actually. I was looking to buy the DAX, which seems to have avoided me a loss. I wanted to buy on, I've just realized I've only got 2 minutes left, so I'll try and speed run this. I wanted to buy the DAX on this bullish candle when we bounced off the 200. I avoided it because I wasn't really keen on the way that the indices markets were moving. It wasn't on the edge finder, so it wasn't a valid trade, but I did quite like the look of the idea. However, the fact that we've bounced off the 200, failed, and broken now below, we've got the H4 that's flipped bearish. We've got the lower time frames, 15-minute, 30-minute H1 that are bearish. Just looks to me as if it's sell rallies. So if we do get the DAX continue higher or have a push higher, I would actually just look to short. I wouldn't really be interested in being a buyer. I don't have any signals to be a buyer of the DAX at the moment. Although I'm not sure if, yeah, the DAX isn't on the edge finder either. So it's not a super high quality trade, regardless if you buy or sell. But I think technicals or technical wise, shorts make the most sense right now. Went long at 73 as a cover. It's up crazy now. On oil, 11% today. Wow, nice, Max. Fantastic stuff. Excuse me. Further escalation means I'm cooked, but I think Trump's going to have to fold because he hates expensive oil. He does, but I think he might hate the Iranians a little bit more. What does he hate more? Honestly, with the current geopolitics, I'd be scared to keep my futures positions over the weekend. Yeah, I mean, that's exactly why I specified if you're already long oil and you can trail your stops, maybe holding over the weekend is It could be a good idea, but it also obviously could be a terrible idea. So it really depends on your risk appetite and obviously how much you've already banked on the trade. If you've already taken some profits off the table, you trailed your stops, I think it might be a worthwhile gamble. But obviously, if you're just in, I would probably look to close before the weekend. How many instruments do you trade? I find more than 4 to 5 becomes difficult to track and focus. I've just realized I'm out of time, but I'll answer that question. I trade every major currency. So pretty much all the G10, not full 10. Normally I'll stick to G7, but I will expand to G10 if I see an opportunity. I'll trade the US indices and the DAX. I don't trade the UK 100 really. I trade gold, silver, and oil, and that's pretty much it. The reason I'm happy to trade all of this is because the Edge Finder makes it easy. So if I didn't have the Edge Finder, I'd have to manually do all of this. So I'd have to manually go and type in all the scores for everything, which is what I used to do. And it just took too much time. So I used to just do a handful of things per week. But yeah, that's the benefit of the Edge Finder. You can trade pretty much every currency and metal. So yeah, there you go. Anyway, ladies and gentlemen, we've got Alan Perez coming to take over the show. Don't go anywhere. Alan's a fantastic guy, fantastic trader. You're in great hands with him. Have a brilliant weekend. I'll speak to you all very soon. Stay safe. Don't get margin called.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. How's everyone doing today? What a crazy day. It's been a crazy week here. The week has flown by so quickly this time around here. There's a lot to talk about here, so I may go ahead and ramble here. Looking at the VIX, though, we did make some new highs here, close to that 29 handle. Now we're starting to fade off a little bit here, but the main move, of course, is escalations going on, right? Still in that region in the Middle East. But then you also have that NFP report that came in very, very bad, right? It was supposed to be plus 50 something K, and it came in minus 90 something K. So that is definitely not good for the rate cut story in the US, and that is why you're seeing the VIX higher here, but you're seeing equities just down on the day. S&P, the Nasdaq, the Dow Jones, right? I remember Donald Trump did go ahead and say that Dow Jones to 100K as we got to that 50K top, and it's looking like that's not going to be the case here. I do like the Dow Jones. It looks pretty cool at the 45,000 handle there. So that's something to monitor. But yeah, this is going to be continued global tightening as far as liquidity goes. Yields are higher across the board here. So you do have the US 10-year yield for the duration of this whole week, 5 consecutive candles to the upside there on the US 10-year yield. Aussie yields right there. You can see it. Kiwi yields right there. Eurozone is up as well. The yen, of course, is continued to be elevated. It's been high already, but just continue to show that strength there. Pound yields as well, and then the Swiss franc yields as well. So you can see that illustrated. Those are just the major economies, but if you go into Spain, Italy, France, all those good stuff, yields are higher across the board as the markets really fear for that global inflation. If this thing stays higher for longer, like this oil trade, or not oil trade, but the oil prices stay higher for longer, then yes, that is a major concern for the world. It's a big thing, right? There's a stat that I got from Kathleen. She did say that, for every $10 of oil added to the price, that is 20 basis points to inflation. So if you start to see oil, past 90 at 100, 120, that is a real concern that can definitely go ahead and disrupt monetary policy and shift it in a big way. Then you can go ahead and see equities fall double digits for a long time. So that is a real thing to worry about. So hopefully we'll see what happens over the weekend. I'm not going to have any trades going into the weekend. So there's no trade setups. There's no trade setups at the moment that I'm looking at, just because there could be two things, right? You could see a further escalation, like things just go haywire, or you see like a little bit of a taco situation. So We'll see what happens. So I'm not going to have any risk on into the weekend, but I'm definitely looking to go ahead and trade next week. So, assuming that the situation is the same, there's still escalations, Strait of Hormuz is still closed off, and you still have oil bid, then I'm looking for a couple things here. Obviously, this is good for the dollar, right? You have higher yields longer, rate cut odds shifted lower. So I can show you here if I go to CME Fed Watch. We'll go to Fed Watch here. I'm going to go ahead and look at the probabilities because they did change here today. So you can see here that well, this is different. I saw it. Okay, so maybe they're shifting a little bit here. But now the next rate cut is in July here. It was September. So now the markets are pretty much battling the idea of, before all of this happened, it was 2.5 rate cuts that were priced in. Now there's only one. And of course, if this continues and you still see higher inflation come out in CPI and all that good stuff, that will definitely change the story. So I do think dollar higher for longer. The only thing is I don't want to buy at these prices, right? So I am looking for some kind of a pullback. However, momentum is a real thing in these markets. So if you do see, or if I do miss an opportunity to get a pullback on the dollar index, what I would rather do is just play the old break and retest, right? So what that would look like for myself would be on the euro dollar, which is the closest thing to actually trading the dollar index. So for those that don't know, the DXY is just a basket of the dollar pegged against other major currency pairs or other major currencies, and the euro is the majority of that basket. So that's why that price action on the euro dollar looks very similar to that dollar index. So what I'm going to go ahead and look to do, if I look for that break and retest situation, what I would look for on the euro dollar would be something like this: break, retest into here, and then trade this thing down lower. Obviously, I want to get a pullback of some sort just so I can get some better prices. At this point, I'm not going to be too conservative here. Now that I see the actual story, you have more data lined up. So before I was looking to go ahead and enter at that 50% retracement level. Now I'm actually going to look for this 38.2, which is that same level that Marco has marked up there, or I think he's filled at that position. So I'm going to take the more conservative stance there. What I'll probably do, I'm going to be very creative when it comes to this position. So if I get the break and retest here, then I'm going to go, both of these scenarios, I'm going to go half a position size on both. So if I get a break and retest here, put half a position size, and I'll be open to, if somehow price manages to creep up here, to put another half percentage, and then I'm in for my full size. Or let's say we don't get the break and retest, but just euro dollar starts to drift higher here. As long as this landscape is still intact, I'll put a 0.5% size here at the 38.2, and then I'll leave another half order ready to go at the 50% to 61.8, and then I'll get filled in at a full percentage point. So that's going to be my approach to the euro dollar. Again, all these positions, because price is already extended, moving in the direction, you don't want to go heavy, at these prices here, because you're no longer getting, in this case, a premium, right? You want to short at a premium when you're going short the market. So that's what I'm going to go ahead and do. I think that's a good approach there. Obviously, if things change, I will let you guys know throughout the weekend. Especially, moving past this weekend, there's a very good likelihood that maybe you get a re-escalation or de-escalation, whatever the case may be. I'll definitely go ahead and let you guys know. I'm gonna go ahead and read the comments here. Alan, I'm short pound dollar, same position as Nick. Fantastic. I think Nick got in a pullback, so you're definitely filled in some premium levels there. So I think the macro landscape and everything, the fundamentals still support your trade, Ray B. So I think you're going to get spot, man. Just trail stops or whatever the case is, whatever your strategy is. Pound dollar short, if you're already in, fantastic. Let's see. Ever since I started working on getting funded, I started getting risky with my personal account. I now reserve my wise trades for my prop account. Yeah, that's the thing with prop accounts, is that it's not real funds, right? So, whenever you're trading, obviously your approach is going to be tailored to your risk profile, what you're willing to accept and stuff like that. With prop accounts, you're kind of forced to go ahead and work within some predefined parameters there. So you have to be very conservative with that. That's how a lot of people actually get blown up with those prop accounts, is that they can actually trade on a live account pretty decently well. But just the rules on props are very, very tight there. And it kind of makes you make silly mistakes and over risk, or not even over risk, but like if you're trading 1% per trade, for example, on a prop account, you're pretty close to getting blown out if you have a string of losses, maybe even 4 or 5 trades, and you're out the account. So that's the dilemma there with prop. But yeah, man, as long as you can, trading both is fantastic, I think. Sluggy said, I trade swing now, but slowly getting into intraday and scalp plays. I like the stress. Oh man, I do that sometimes, right? If the environment is super specific, I'll do that. Like in a very trending market, some things I like to do is I like to go ahead and look at currency strength chart here, and I just pair the strongest versus the weakest. And then I just intraday like on some pullback levels and stuff like that, very, very short term. I haven't done that in a very long time, to be quite honest with you. Last time I did that was like early 2025 and 2024 as well. But yeah, it's definitely a thing you can do. In this environment, I really wouldn't do it. If I'm going to go intraday, I would take another approach. It would be something like, for example, in this case here, maybe like shorting the euro dollar intraday and stuff like that. But just because we have that overnight risk or the weekend risk, I'm not going to do anything intraday. Cycling Club said, Alan, do you think DXY is not a good proxy for USD strength under these circumstances, since it's about 55% of euro, but euro is intrinsically weak and weakening right now? I think the question is, do you think DXY is not a good proxy for USD? Don't quite understand that question, Cycling, but again, I'm looking for DXY strength. Pretty simple there. I think I can continue. If momentum goes ahead and continue, then I'll just wait for the break and retest. If not, I like the euro dollar. I think what you're getting at, Cycling, is the euro dollar is the majority of that DXY basket, so that price action is the same. So that's also fantastic, right? But then also too, you do have another layer that hurts the euro, which is going to be their proximity to the region. And they seem to have been getting very, very much hit with that. Marco educated me the other day that, he saw a post out there that's saying, gas prices are already 20-25% higher in the region. Obviously, that's not very good for the Eurozone economy there. They were coming out of the stagnation environment, and growth is already very weak there. So that can definitely go ahead and cripple the euro lower. So it's a combination of two things, right? Or three things, really. I want to go long dollar index. The best way to go about that would be via the euro dollar, because it makes up most of that basket. But then you also have some isolated pressures in the Eurozone economy. So that's why I like Eurozone or euro dollar short there. I hope that makes sense there. Max, I know you're in France over there. He said price rise already every day. So yeah, that's basically what I'm betting on there. And also too, like in this time where you have elevated inflation globally, right? Let's say, someone made a comment on my IG post the other day saying like, yields are going to rise altogether. So, basically what I was saying was, gold doesn't like the dollar rising because it's a higher, it's a yielding currency and money flowing there, and it can continue, right? But someone said, that's not true. Global yields are moving all together, right? So it really wouldn't make a difference. Well, if the dollar, for example, is starting here where other currencies or other economies are starting here, because, for example, in Europe, their interest rate is like 2%, right? We're 4.5 and they're 2%. So if yes, they all move in tandem together. However, if this thing moves higher and this one moves higher as well, the dollar is starting from a higher vantage point. So that's kind of what I'm getting at there. And that's why I think the dollar index will be that higher yielding currency and the benefit to this whole environment there. So hopefully that makes sense there. So yeah, that's basically what I was going at. In the morning, I passed over a car station. In the afternoon, price jumped 3% just within yesterday. Yeah, man, it's getting real. I did see in the U.S. some signs like dollar or prices are up like $1, which is a big deal, especially if you're in the South. Like the South is where I'm at now. It's where I grew up at, and we're known for lower prices. So yeah, if you're seeing that in the South, I could only imagine what's happening in the North or on the West Coast or East Coast up in those regions. So yeah. Let's go ahead and look at gold here. Gold, I assume, is getting a better reading on the Edge Finder. Last time I checked, it was like a -2 or something like that. But I assume now that you have the newer figures updated here into the algorithm, I'm sure that gold is actually getting a better reading. So we'll go ahead and see there. It's -1. You do have these bullish factors here for gold now. Again, You can think of gold as a counterpart to the dollar. It's not a one-to-one correlation, but it's pretty close up there. They tend to move inversely of each other. Non-farm payrolls came in bad for the U.S. That's good for gold. Unemployment rate ticked up in the U.S. That's good for gold as well. Retail sales too. We missed expectations there on that front, or slightly missed expectation. That's good for gold, right? So maybe if you see the dollar index kind of taper off a little bit, which you're actually seeing that right now in that 4-hour time frame, then gold will go ahead and catch a bid there. I still think gold is under pressure. If you still see this environment of higher oil, right, yields across the board are going to go higher. Dollar will flow into that higher yielding asset, which is that DXY, and that will definitely go ahead and pressure gold. Marco, how's it going, man?
Oh, hello.
Doing all right?
I'm doing pretty well. How are you?
Pretty good. Round of applause for your euro dollar position. I shouldn't have hesitated as I always do.
Sorry, what did you say?
I said I shouldn't have hesitated as I always do.
But it's still pretty close to the entry. So, I mean, the NFP print was super bad, which should have been bearish for the dollar. That really didn't happen, which was a bit of a shocker for me personally. I know we were looking for a bit of a rally in the euro dollar to get in on a short. Let me just zoom in a bit. Okay, it's starting to go down now. So the NFP candle was right here, which wicked massively, and now we're starting to fill that wick. So hopefully, I mean not hopefully, but the dollar should lose value on that. What do you think about it?
Yeah, I made a reel yesterday, essentially going over my game plan for NFP, and analysts expected that it was going to be a lower number. Now, granted, we did get a way lower number than expected, and my idea was, if NFP comes in as we kind of expect it to do, of course, it's not a certainty, but if it does come in weak for the U.S., that's actually bad for the overall narrative there. I was looking for the euro dollar to catch a little bit of a bid, so I can get a chance to go ahead and re-enter. NFP came in way lower than we thought, but still the dollar index was up there for a little bit. Now we're starting to see, as you mentioned, the dollar index fade off a little bit here, but the euro dollar is still pretty low there. So I'm kind of questioning the gravity of the pullback. Again, I'm very open to it. I don't know if you were listening earlier, Marco, but essentially what I said was I'm now going to go ahead and approach this a little bit more creative there. So with the Euro USD short, instead of waiting for that 50% retracement level that I was going to, wait for, these shallow pullbacks seem to be in play. I have my alert now at the 38.2% retracement level, where I think you're at there as well. And I'm going to go up there with a half position size, and then just be open to take another size there. If we do somehow get to that golden zone, that 61.8 or 50% retracement level. If not, then I take my 50% right here at the 38.2. And if the thing just kind of trades lower and we get a break and retest from this level of support that I have marked up, then I just take another size there, add on to it, and then just trade it lower. So that's basically going to be my approach for Euro USD.
That makes sense. And also, before we continue, I just want to post the link to the giveaway form. So in the comments of the stream, you guys can find this form, fill it out, and then in, I think, 20 minutes, I'm going to announce the winner. So yeah, getting back to it, euro dollar, the fundamentals are still in play. The edge finder is still bearish, if I'm not mistaken. So still bearish even with the NFP print. But of course, the main thesis behind this position is the war, the conflict. So the thesis is that the conflict is going to last more than people expect, which is going to push the dollar higher, and it's going to hurt the euro. It's already hurting the euro. So these like gas prices and energy prices are really bad. And if that stays for a prolonged time, it can definitely have a huge impact on the economy. So we're going to have to see what happens. Maybe the ECB will cut. Maybe they will stay neutral. Maybe there will be more inflation, because with rising energy prices, inflation is an issue. So they're going to have to see what is better, cut rates or raise them. And one thing that I read online is, when looking at Oil. If I bring up U.S. oil, whoa, we have
Yeah,
just.
man.
I didn't see this
Yeah.
candle.
Yeah, man. It's just like continuously going on, man. It's crazy. If you look at this thing from a weekly time frame, it's just insane.
Let me see it. Damn, that's a massive candle.
Yeah.
Like if U.S. oil approaches 95 or 100, that is going to put a lot of pressure onto the U.S. administration to possibly do some sort of a deal or maybe claim victory, because at any point in time, Trump can come in and say, we have bombed the crap out of Iran. We have just destroyed all of their nuclear facilities. We have essentially won the war, even though they may have not, but he may declare victory just because there's massive pressure from the market for him to do it. He did it in the Liberation Day. So when he slapped on the massive tariffs, there was a big taco after that where just the price of the markets and the weight of the markets completely forced him to do a 180 on his decision.
Yeah, the bond market, I remember, scared him. That was the big culprit behind that. I also did see, Marco, not that I'm putting so much weight onto these headlines, but I did see, I'm not going to go through them all, but there were some Fed officials there. Goldsby, I believe, Goldsby was saying basically, it's a tough miss on the job market today. If we got several months of this, it's going to be a real concern. They were also having some inflation comments as well. So to your point, like to a certain extent or at a certain point, everyone has that tolerance where it is like, maybe it is time to scale back a little bit. But we'll see. We'll see what their risk appetite is, when it comes to this oil elevated. But I keep saying this stat, but I got it from Kathy Lean, and it's a very interesting one. But for every $10, that's 20 basis points added to CPI. And so if you do see a humongous monster run up, I mean, you can do the math. That's not going to look good, and that will force the Fed to go ahead and start being a little bit tighter, whether it be holding for until 2027 or actually having to move that needle up, start hiking rates.
Except governor, I think the name is Miran, who always wants a 50 basis point cut. Like in any sort of an environment, he's calling for 50 basis point cuts. That's a real problem. I mean, you're getting bad NFP and you're getting higher inflation. What can the Fed really do in that situation? Maybe they won't cut at all because of the rising inflation from the oil prices. That's why I also mentioned the rising oil prices may put some massive pressure on Trump to end the conflict prematurely, and to see Fed rate cuts, and to see the thing that he loves the most, which is stock market flying higher, and just cheap loans, stock market higher, and everyone sort of being happy with the economic situation in the US.
Yeah, and something that you've mentioned before in our discussions, Marco, is that the midterms, right? That like the stock market, all that stuff. That's his report card, and that's kind of his recourse to have a good campaign and all that good stuff. If things start going south, man, like that, especially now, that's going to be fresh, top of mind for everyone, and so that report card is going to be looking like an F instead of an A plus. So you have a very valid point there.
And also, I noticed like the way for us traders to gauge what is happening, you shouldn't really be, I mean, you can look at Twitter, of course, but you're going to waste 5 hours per day just looking at random headlines and Andrew Tate flying around Dubai. But the best way to measure the actual sort of resolution or the continuation of the conflict is for the price of oil. If oil is going up, that means no negotiations are happening, things are not improving, and the situation is still pretty bad. If oil keeps dropping or starts a pullback, then maybe things are cooling off a bit. So like the perfect gauge for the length of the conflict is going to be the price of oil. And so far it's just exploding higher, which means things are just not getting resolved at all.
Yeah, that's a great point. And to all the audience members out there, it is very, very easy for you to get mixed up into the headlines because you have side A and side B, and they both want to push a certain agenda. And also too, in this world where you have AI and all this crazy stuff, right? Like you can see a lot of misinformation. I saw a video, Marco, of a
Okay.
B2 bomber on a trailer being moved around in
Sorry,
Iran.
yeah.
Like, what the heck? And it looks so real. So in that case, like, the price is going to be your friend. The price will go ahead and tell you what's really happening and what's not. There was you have these like hedge funds, right, that are really pouring lots of investment into knowing or being in the know and making money. And so just let them do the work for you. There was a story where like it was a hedge fund, and they basically hired a guy to go ahead and camp out at private airports, like for private jets and stuff like that,
Yeah.
with binoculars. And basically what he would do is like, there would be a corporate meeting, and he would look at the plane, and if the people come out happy or whatever, then it's like, okay, that's a good confirmation. Or if they come out pissed off, then that's a bad confirmation. So you can imagine the boots on the ground that you have from these hedge funds, these people with very resourceful, and they're getting the insight and stuff like that. So like, again, just follow the price and they will tell the story, and just kind of stay away from the headlines, and that's just from a reputable source. Financial Juice is a good way of getting that information. If it's confirmed, they'll go ahead and post it up there. But yeah, follow the price will be your compass.
Yeah, and there's also the pizza indicator, which is all of the pizzerias near Pentagon, I believe. So essentially, when the pizzerias are super busy, when the pizza places are super busy, you know that something is going on and that everyone is at the Pentagon probably discussing an attack or defense from someone. So I think there's an account on Twitter that measures the active hours of all of the pizza shops around the Pentagon or something like that.
That's a first. That's the first I've heard of that one.
Yeah, it's I think it's either in Washington or near the actual building. I'm not sure, but there's actually a Twitter account, and there's a big correlation between the active hours, and usually after the active hours, you get some sort of a conflict somewhere. So,
gotcha. Well, I would say, Marco, maybe that method is patched. Given the current administration, I would look for McDonald's sales, Burger King sales. I don't know if you remember, but there was like a sports team that I think it was first term Trump had them in office, and instead of having this fantastic big dinner, he just ordered like 50 or 500 hamburgers from McDonald's and 1,000 McNuggets. So yeah, I think that method is still there. So yeah, we'll see.
Absolutely. So the thing that was also on my radar is gold. I mean, gold is not moving. It's not moving, and we are in a massive risk-off environment. That's a big problem. So I wanted to ask your opinion about it. Would you have expected gold to already push higher a bit, or is this normal in your opinion?
Gold, in my opinion, I'm gonna do this. I'm gonna put these two charts side by side. And this is just my personal opinion here. I'm gonna delete this real quick. We're gonna put the gold next to the dollar index there on the daily. Yeah. So for these last couple days here, this is what I'm basically looking at here. We'll go ahead and put a rectangle there. Gold is essentially moving in tandem with the dollar to an extent. So I'll just put this right there, and I'll put this right here. So basically, like you're getting on these last like couple days here, you're getting a little bit of chop with gold. I think if you see the dollar really start to fade off there, gold will honestly benefit from that. However, if you see the dollar continue to rally, then gold will continue to get pressured. That's basically my thoughts on gold. I would assume that you will get some kind of a bid there in gold now, especially now that you have, if you just look at the Edge Finder, we'll go to the asset scorecard here, look at gold. It was getting a much better reading. Now it's -1. We'll see how that, shifts throughout the week there. But non-farm payrolls, unemployment rate came in bad for the U.S., which is good for gold. So I think that you have a little bit more, better things to look at there when it comes to gold. I like this level of support. This was that range that we were playing in, that playground. We seem to have been holding it pretty well. However, the more time you spend in that zone, the more kind of vulnerable it gets, the more sensitive it gets, the more weaker it gets. So we'll see how that goes up. Of course, like now at this point, if you see a sharp rally in the dollar, then this thing is just going to go ahead and tumble over. And I think that's a good thing, right? If you're flat on that market, you haven't traded it, you're looking for an opportunity to go ahead and trade that market, then that's just a good thing. You just get gold at a better price. So yeah, that's basically my thought process on that.
Yeah. For me, just the macro situation is a bit concerning. Gold always used to be a safe haven. I know when there's massive DXY strength, gold suffers, but it should at least catch a little bit of a bullish uptrend, at least a little bit of buying, and it's not catching anything. So possibly there's been so much retail buying, and gold has been acting more like a crypto coin that kind of the safe haven status is no longer that powerful and that much present. But I don't know. We're gonna have to wait and see on that. I'm definitely looking to buy. I want to get in at this 20 MA. I would look for, of course, a bullish reading, and as you mentioned, the NFP print was super bullish for gold. But overall, if we count everything, we are still neutral on the edge finder. So, what else do you have on your watch list as far as the currency world goes?
I'm looking at Aussie dollar too for long-term plays.
Okay.
Of course, we'll see how this risk off really starts to shine here. Oil is up. Let me measure the entire move here, and this will be my last point here, Marco, because I know you have to do the giveaway here very shortly.
Yeah, no
but
worries.
oil since that open is up 32%, 33%, give or take, and you have a risk on currency like Aussie dollar holding up pretty decently well. So I do like this. It's showing some relative strength there. Also, too, considering that Aussie and gold is a little bit correlated, not 1-to-1, but it's there. And so, given that like gold kind of weakness that you're seeing, Aussie dollar is still up there. So, especially if you have, they're fighting inflation. Let me show this chart here real quick. Let's go to macro scanners.
It's economic data.
Economic data, yep. Economic data, inflation, CPI. 4 consecutive prints of elevated inflation there for the Aussie dollar, 3.8%. They will be starting this inflation hiking from a higher vantage point. And they already had a pre-existing reasoning to go ahead and start hiking rates. So if you start to see that play out there, I do like Aussie dollar to the long side here. Looking at Aussie 10-year yield, you can see that it is approaching near-term all-time highs relative to where we've been at since December 2025. So this is Aussie 10-year yield here at 4.8%. It's a full point above where CPI is at right now. So I do like Aussie dollar long there. I would be waiting for a pullback. We're pretty close. So I have my alert right here at this level. I'm going to just move it up here to that 6,950 level. But yeah, that's going to be the other trade that I'm looking to go ahead and take on that Aussie dollar. So just that one long, and then euro dollar short. Again, I have 2 options to go ahead and do that.
Nice. Yeah, I'll be watching the Aussie dollar like a hawk, because if oil explodes higher and puts a lot of pressure on Trump, he's going to declare victory and Aussie dollar could explode. So I think the Aussie dollar could really catch a bid on any sort of a conflict resolution. So if you can prematurely get in, that's a good reward to risk as well, because if you get in and you hit the stop loss, it's just a -1%. But if there's a conflict resolution, I think the move higher can really be a big one, like 2%, 3%, something like that. And your point is great in saying that it hasn't really moved down a lot, which is pretty weird. Like you would expect such a risk-on asset like the Aussie to move lower and the dollar to absolutely crush it. That hasn't happened. That shows you something as well. It shows you relative strength, and it shows you kind of bad news, good price, which is extremely bullish in and of itself.
Yeah, it's crazy times that we're operating under right now, but that's why we say, and this will be my last take before we go to everyone watching on the stream here. If trading in this environment can be very, very confusing, but if you have all the data at your disposal, like for me, I was able to just off the back of my mind, like remember that a CPI chart for the Aussie dollar there. Get yourself a copy of the Edge Finder. I promise you, it will be your friend. It will pay for your. I promise it will pay for itself if you use it correctly. You watch the streams, you watch all the guest shows on here. Edge Finder will be your best friend there. I think they do have some kind of a sale going on, and also to the Telegram channel, completely free. If you just for some reason you can't justify affording the Edge Finder, at least join the Telegram channel. It is completely free value. every single day. I go ahead and drop 2 charts of the day with a quiz at the end of the day. Today I had oil and yields, global yields up on the day, and also the Dow Jones. So go ahead and join that and stick around because Marco does have a DNA funded challenge giveaway. So more value for you.
Yeah, thank you, Alan, and see you next week.
Alrighty, man. See ya. Bye-bye.
Yep, see you. Goodbye. So let's continue. I'm going to post the link to the form. So in the comment section, you can find the link to the form, fill it out, and you will get entered into a DNA funded giveaway. I'll announce the winner in 5 to 10 minutes, something like that. Getting back to the charts. So I have one position open on the euro dollar. And I have a small experimental position, which I didn't post as a signal in the A1 Discord because it's a low risk trade and it's a low conviction trade as well. I'm betting on a possible intervention from the SNB, so central bank, Swiss central bank. Essentially, if you look at the financial juice, if you go to the breaking news and you type in SMB, you're going to see that they have been talking about a possible intervention. So SMB intervention. SMB seen favoring FX intervention. SMB signals readiness to curb franc strength. SMB or Swiss franc surges to decade highs against the euro before SMB threats cool CHF markets. So, possible intervention coming. The SNB has mentioned multiple times that they don't like this level. They don't like a very strong Swiss franc. It hurts their exports. It makes all of the Rolex watches a lot more expensive for people in the US and people in, let's say, I don't know, Germany. So small position, kind of more of an experimental trade. But my best trades I post as a signal in the A1 Discord. So this one is an example. So euro dollar sold it at 1.164, stop loss 1.174. It was a signal. And if you want to get these trades, definitely click the link in description, join the A1 Discord and use the code MARCO, not Marquee, but MARCO to get 25% off. So I'll see you in the Discord. Those are the positions. Gold, I told you the game plan. I'm looking for a bullish print. Pound Aussie. Pound Aussie, I really like. Pound Aussie, I want to sell. Couple of reasons. All of them you can find in the Edge Finder. So, top setups. Bearish reading -8. Then you look at the central banks. So, if you go to interest rate projections, we put in the Aussie and we put in the GBP. The RBA is looking to hike interest rates while the Bank of England is looking to cut them. So perfect scenario for this thing to go down. Then let me show you some more data. GDP for the Aussie. Pretty nice and rising. Now look at the GBP. Kind of in a downtrend and very low, 0.1%, 0.3, 0.7, really bad numbers, really low numbers. The inflation is not really that much different. There's high inflation in both countries, but the unemployment rate, check this out. Look at the Australia, flat, and it hasn't changed much throughout the months. Now look at the UK, rising. So from 4.4 to 5.2, definitely rising unemployment, definitely weighing on the British pound. So I'm looking for a pullback. We're pretty close to the 20 MA, looking to get in on a sell setup, and I think it's a pretty high probability trade. If I decide to take this position, you will of course be notified in the A1 Discord. So make sure you join. Time for the giveaway. Time for the giveaway. Let me see, 6th of March. 6th of March, 6th of March. Okay, we have quite a lot of entries. Awesome. Damn, this is a lot of entries. Okay, nice. Let's copy all of the names. We have the wheel of names. Paste, spin. Let's see. So, Zvakili, am I butchering the name? Sorry if I am. Anyways, Vakili M, congrats on being the winner. I have your information. I have your email in the documents. So after my segment, you can expect an email from me with the code to a free 5K one-phase DNA funded account. If you didn't win, but you want to get funded, you want to expand your trading capital, definitely do check out DNA Funded. So this is my personal 25K two-phase account. Current equity is 26.6K. So you can see the profit target is 2.5K. I'm up 1.6. We will see what will happen. Had a great experience so far. Had a couple of accounts before. Didn't get a payout yet, but that is the main goal. So if you want to get funded, you can get a great price with our discount code, which is A1 Live. So A1 Live gets you 25% off any DNA funded challenge. Yeah, definitely take a look. It's a great prop firm. There's a big broker behind it. And if you look at all of the best prop firms in the space, and there are very few of them, but with DNA, with this code A1 Live, you definitely get the best price. So also, I prefer the two-phase accounts. If you're wondering, 10K, 25K, 50K, two-phase accounts, in my opinion, are the best value. So do with that information what you want. Continuing with the program, let's see. So US stock market's doing pretty badly, getting sold off. Yeah, not doing well, especially the Dow. And then if you look at the DAX, what is happening to Germany? What is happening to the DAX? It is now at pretty much the same price as it was back in March of 2025. So the DAX is break even for 1 year. That is really, really bad. And just to show you the GDP in Europe, so take a look. It is pretty low, 0.2, 0.3, 0.2, 0.1. That's bad. Add on to that the issues with the supply. So you have issues with the Strait of Hormuz. You have the issues with supply energy, the energy or supply of energy and supply of oil to Europe. That is going to weigh on the GDP. That is going to weigh on the growth. So just to check what is currently priced in, we have the central bank rate forecast website, absolutely free, by the way. ECB. Okay, it's gone up a bit. So looks like the market is expecting a bit of a rate hike for the ECB. OJ, RBA still hiking or planning to hike. Bank of England still looking to cut. The numbers are getting lower and lower. So pretty much things are the same. The ECB, the pricing hasn't moved that much. Yes, it went up a bit, but not much. What is pretty weird is that NFP reaction. So I really thought the dollar was going to sell off like crazy, which didn't really happen. Yes, we initially had a move lower, but it got bought up straight away. I'm not sure what is happening there. If I get some more information, I'll definitely update you in the Discord. So, time for requests. Let me see what you guys want me to analyze. For now, we trade the risk-off war market. Yeah, so the summary right now, the current narrative is the war is still going on. The conflict is still going on. There's no talk of negotiations, no talk of slowing down. Oil prices are pretty much exploding higher, and oil prices are your best gauge to look at, is the conflict expanding or is the conflict dying down? If the price is going up, means the conflict is unfortunately expanding. And we had some news as well. Let's see. So what did we just get? We didn't get much. Let me see. On the market moving, NFP was a market moving event. Qatar's energy minister forecast that crude prices could soar to 150 a barrel in 2 to 3 weeks. Damn, that's crazy. That is absolutely nuts. That can definitely put a lot of pressure on Trump. One thing that Trump doesn't like is pressure from the markets. So maybe he kind of declares an early victory. And victory is a really wide term. I mean, anything can be claimed as a victory. He can claim that he destroyed all of the Air Force, all of the Navy. So that's a clear victory. Let's see. The last thing for today, because my time has run out. Let me see some requests. DXY, GP, JPY. Let's see, what do I like here? Tesla. USD CAD. USD CAD. Okay, USD CAD. Let's take a look. USD CAD staying flat at the moment. What does the Edge Finder say here? USD CAD. Bearish reading. To be honest, the reaction from the conflict hasn't been drastic. Looks like both the dollar and the CAD are strong right now. Looks like both of them are getting bought. So I don't see a clear edge in this particular market. If you want to do something with the dollar, I would rather sell the euro dollar. If you want to do something with the CAD, I don't know, maybe pair the CAD with GBP CAD. Yeah, that seems to be working. So you have to pair the weakest currency with the strongest one. Looks like both the dollar and the CAD are strong right now. So you're not going to get a massive move in that sort of an environment. I think it has to do with the CAD being connected with oil prices. I'm going to have to check on that. But USD CAD, not really moving anywhere. I don't think you have a massive edge in trading this market. So that is about it. Thank you very much for watching. I'll be streaming every single day next week. I'll be streaming with Alan, and I'll be doing one giveaway per stream. So you can find my schedule on the A1 Trading website. Good luck in the markets. Stay safe, and I will see you on Monday. Goodbye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.